Distinguished guests, esteemed colleagues, a very good morning to you all. Welcome to the second African Takaful and Non-Interest Finance Conference with the theme Islamic Finance and Takaful, Building Resilience in a Volatile World. The global economy has not recovered from its post-pandemic distress. Nations are looking for better ways of organizing economic activities within their borders and amongst themselves, while individuals and businesses continue to grapple with the effects of rising inflation, climate change, mass migration, and social unrest. On our continent, population is growing rapidly. People are moving from villages to cities. Most young people have no jobs, and many talented people are moving abroad. By focusing on profit-making above all other considerations, by disregarding the cultural nuances of our communities, and by ignoring the specific needs of the underserved, especially those in rural areas and those with strong moral guardrails, conventional finance continues to fall short of meeting the basic needs of most of our people. It is ironic that in supposedly democratic economies, there are glaring needs to safeguard fairness, which is usually taken for granted, while never quite assured. This moment in history calls upon all people of good conscience to reflect deeply on the past, critically appraise the present, and define a tenable vision for a sustainable future. It is in this context that Takaful and non-insurance finance, governed by Sharia traditions, reemerge as tenable, time-tested, and culturally appropriate catalysts for change. Rooted in principles of solidarity, built on trust, focusing on risk sharing instead of risk transfer, and on profit sharing as well as profit making, Takaful and non-interest finance models align seamlessly with the teachings of all the three Abrahamic faiths and with the communal ethos of African societies. They present alternative channels of financial mediation based on universally accepted principles that can accelerate financial inclusion well beyond Muslim communities. Their focus on collaboration and community development makes them powerful levers for addressing some of the pressing challenges facing our continent. In Nigeria, we are already actively providing access to affordable capital in underserved communities, catalyzing the accumulation of savings while encouraging prudent, ethical investments. Our governance structure compels us to deliver services that are totally aligned with the aspiration of our host communities, and also to engage everyone with integrity, transparency, and respect. We are not just profit-maximizing enterprises. We are collaborative endeavors by all stakeholders working together to make our communities more just and equitable. Your presence here today gives us assurance that this conference is well on its way to becoming an influential platform that will widen and deepen the industry as we continue to resolve the long-standing socio-economic contradiction of mass poverty amid abundant natural resources and boundless creative energy. As thought leaders and respected practitioners, over the next 36 hours or so, we must tease out fresh ideas, facilitate knowledge exchange, and move on from here to begin to unlock the much vaunted yet elusive potential in Africa. I'm grateful to all our invited speakers who will generously share their valuable insights. I'm equally grateful to those who are here to listen, who are going to ask useful questions, and who are going to learn. But it is to you that I'm most grateful. Those of you who will go away from here inspired by new knowledge and motivated by new partnerships to take concrete action to lead our people out of poverty into prosperity and thereby make the world a better place for all humanity. Inshallah, this conference shall prove successful for each one of you and the institutions you represent. Thank you very much for your presence. Assalamu alaikum wa rahmatullah wa barakatuh.
Another round of applause, please. A few words that stood out in the chairman's address, right? The principles of equitability, around a just and fair world, the matters of a communal society. All of this actually, for me, reminds me of a Southern African principle. It's something they believe in called Ubuntu. And Ubuntu translates into, I am because we are. And perhaps a conference such as this is one that does uphold those principles and seeks to establish, again, a more just and equitable society for all. And his reference to Africa as a continent tells us that this is probably the starting point, right? Where a just and fair world really will or is possible, and it starts from the African continent. Now, I won't take up more time. I have the pleasure of introducing the speaker who will be presenting our keynote address. Nur Takaful is pleased to welcome the NICOM Commissioner, Mr. Olusegun Omoseyin, who unfortunately is absent today, but he's ably represented by the Deputy Commissioner for Insurance Technical. Please put your hands together as we welcome Dr. Usman Jankara Jimada to the stage.
Assalamu alaikum. Permit me to recognize the chairman of Nur Takaful. I understand the chairman of Jais Takaful is also here. I also understand that my colleagues from the Central Bank of Nigeria are also here. I also want to recognize distinguished members of the press that are also here. As the MC had said earlier, the commissioner is unable to attend, and as such has mandated that I represent him at this event. He has, however, asked me to extend his sincere apologies and warm greetings to all participants at this conference. It is also my privilege this morning to deliver this keynote address at this very auspicious conference. I extend my gratitude to Nur Takaful for organizing this significant event. I also extend my gratitude to all those who are here present. It's in recognition of your commitment to enthroning Islamic finance and Takaful in Nigeria. As we continue to navigate an era, as has earlier been highlighted by the chairman, an era that is marked by economic volatility, environmental challenges, and social inequality, we need to work as one in enthroning the time-tested principles of Takaful. While conventional insurance or financial system often fall short in addressing the multifaceted risk faced by individuals and community, Islamic finance offers a unique perspective rooted in ethical principles and social responsibility. Islamic finance is not merely a set of financial products. It is a comprehensive system promoting fairness, transparency, and risk-sharing. In fact, at its core, it encourages investors to consider the social, ethical, and environmental implications of their financial decisions. This holistic approach is particularly relevant today, where the consequences of financing extend beyond mere profit and loss. Driven by increasing demand for Sharia-compliant financial services, Islamic finance in Nigeria is growing rapidly. The sector accounts for approximately 2.3%, 2 to 3% of Nigeria's total financial market, valued at about $3.8 billion. Sukuk dominates the market at about 59%, followed by non-interest banks at about 39%, and Islamic funds and Takaful at about less than 1%. The Islamic finance industry comprises 4 non-interest finance banks in Nigeria currently. We also have 5 Takaful companies in Nigeria, as well as 15 microfinance institutions and 10 non-bank financial institutions in Nigeria. However, it is important to stress that central to Islamic finance is the concept of Takaful, or Islamic insurance. Unlike conventional insurance, which often involves risk transfer, as been highlighted earlier, and interest, Takaful is the Sharia-compliant form of insurance based on mutual cooperation and support for the needy. Participants contribute to a fund which is used to support those in need, fostering a sense of community and solidarity. It is therefore imperative to restate that in a world where climate change, health crisis, and economic instability threaten our livelihoods, Takaful offers a resilient framework that provides not only financial protection, but also a safety net that empowers individuals and communities to recover from adversities. By promoting risk sharing and collective responsibility, Takaful helps mitigate the impact of unforeseen events, enabling families and businesses to bounce back more effectively. The principle of Islamic finance and Takaful are especially pertinent in enhancing resilience through risk mitigation, social justice, and sustainable development. I would have loved to further emphasize the critical importance of the 3 highlighted areas, but given the time constraint, I will skip that. From the National Insurance Commission side, we have played our role and have been very instrumental in promoting the growth of the Takaful insurance industry in Nigeria. And this we have done through several initiatives, some of which are we've issued the Takaful operational guidelines in 2013. The Commission has also licensed 5 Takaful operators with the concept gradually gaining acceptance. Although Takaful currently represents 1 to 2% of the insurance market, the future outlook is promising, considering the average annual growth rate of 34% in contribution recorded by the industry in the last 4 years. The Commission has undertaken several other initiatives to support the Takaful insurance industry. The initiatives include the application of risk-based approach, capital approach, which had afforded Takaful operators a more relaxed minimum capital requirement. The proportionate qualification requirement, which facilitates new entrants into the Takaful market in Nigeria without the need to meet the rigorous experience requirement for conventional insurance. The market conduct and enterprise risk management guidelines for Takaful and re-Takaful operators, which were issued to ensure best practice and effective risk management. Furthermore, several stakeholder engagements and sensitization workshops have been conducted to raise awareness and educate the public about Takaful and its benefits. We have continued to collaborate with international standard-setting organizations like the IFSB, IOFI, and others, with a view to providing the requisite regulatory guidelines, technical training, and support for the industry, among others. Additionally, the Commission is also working with other regulators like the CBN, SEC in Nigeria in order to enhance the opportunity for Takaful and other non-interest finance institutions in Nigeria. As we face global challenges such as pandemics, environmental hazards, and geopolitical uncertainties, the resilience offered by Islamic finance and Takaful becomes increasingly vital. The recent pandemic has highlighted the fragility of our existing system and has also shown that sole reliance on conventional models may not suffice in times of crisis. The Islamic finance sector has the potential to innovate, adapt, and create products that cater to the emerging needs of the populace. In conclusion, as we look to the future, let us leverage on the principle of Islamic finance and Takaful to build a more resilient world. Together, we can create a financial system that not only withstands volatility, but also promotes prosperity for all. Let us support policies that will foster partnerships that drive innovation and educate our communities on the benefits as well as the growth of Takaful and the Islamic finance industry in Nigeria. I wish you very fruitful deliberation, and I also expect action points that will enthrone a very resilient Islamic finance and Takaful sector in Nigeria. Thank you very much, and good morning.
Dr. Usman Jankar Jamada is Deputy Commissioner for Insurance Technical at the National Insurance Commission, here representing the Commissioner himself, Mr. Olusegun Moshe. Another round of applause, please. At this point, if you check your program of events, you will see that it is just about time to break for tea. And this is going to be somewhere around 20 minutes. During this period, we'll be preparing for what is our first discussion of the day. So I think to your left, which is my right, you will find that there are servers who are ready to serve you. So please enjoy. And you're encouraged, please, to use the time, right? Because we're back here in exactly 20 minutes.
2, check it.
We only have a few more minutes before the first panel begins, so please, you're encouraged. There's still tea being served so that you can grab a cup with a light snack before we begin. We're starting off in just a few minutes. But also, we'd like to encourage those of you seated at the back of the room to please move forward. Please come forward. If you can fill the tables in front of you, it's very important that you come forward, please. In these last few minutes, while you're moving to the row or the table in front of you, there'll be hostesses around to help you. So please, if you could give them a listening ear. All right, ladies and gentlemen, once again, this is the African Takaful and Non-Interest Finance Conference 2.0. If we could please take our seats, as the first panel is about to begin. A quick reminder of some of the rules. Very important that we keep the aisles clear. Please keep the aisles clear so that you don't restrict the flow of movement. It's also important that we put our phones on silent. For those of us who are seated at the back, if you could please move to the empty table in front of you. It's very important for camera. Please move to the table in front of you. Now, on the program of events, you would have seen that we are to begin with a fireside chat on the role of ESG in strengthening Islamic finance and Takaful. There's a bit of a switch up. That fireside chat will still happen, but we'll be beginning with the first panel discussion. And as the day goes, the panels will take this format. I have the pleasure of introducing the moderator of the panel, who will then introduce their panelists and the speaker. The speaker has a few minutes to lay the foundation for the topic of discussion, and then the panelists will speak, we'll have a discussion on the matter, and then open up to the floor for questions and answers. This is just a rough idea of how each panel will unfold. Without further ado, the first panel for today is on ethical investment strategies in Islamic finance, opportunities and challenges. And the moderator for this conversation is the Managing Director, CEO of Cardinal Stone Real Assets Limited. He happens to be co-founder of Cardinal Stone Partners, a multi-strategy investment management firm. He has over 25 years of experience in investment management and financing, and plays key advisory roles in real estate and infrastructure, with expertise in deal screening, portfolio strategy, development, and asset management. He's previously held leadership roles at Cardinal Stone, Renaissance Capital, and Zenith Securities. He happens to have begun his career at Stanbic IBTC Bank. Please join me in welcoming Mohammed Garuba. Please put your hands together as he makes his way to the stage. He will introduce his panelists and the speaker for today's conversation.
Hello. Good. Good morning, everyone. And welcome to the very first panel. Like the moderator said, my name is Mohammed Garuba. And with me, I have, on this panel, I have Dr. Hakeem Oyewale, who is the speaker for this panel. Hakeem Oyewale is the Managing Director, CEO of Marble Capital Limited, and he'll be speaking to us on ethical investment strategies in Islamic finance. I also have Dr. Munir Buba, who is an Executive Director, Asset and Resource Management Limited, ARM, where he oversees the investment unit, retail, institutional. I also have with us on this panel, Ndako Mijindadi is the head of investment research, Lotus Capital Limited. And joining us online is Dr. Bashir Oshodi. I hope, okay, great. Dr. Bashir Oshodi is the chief executive of Trust Ator, a fund management company and advisor to a UK Sharia-compliant real estate fund. I'd like you to join me in welcoming all my panelists and the speaker with a huge round of applause. Thank you. So I think the aim here is as much as possible to make this one of the best Islamic investment panels you've ever attended. And that's why I have this very well-curated speakers joining us today. To kick this off will be Dr. Akim Oyewale, who will spend some time presenting his very well-thought-out paper on this very topic, ethical investment strategies in Islamic finance. Join me in welcoming Dr. Akim Oyewale.
Thank you very much.
Beautiful. Yeah, thanks a lot.
Good. Okay. Bismillahirrahmanirrahim. Good morning, everyone. My name is Akim Oyewale, and I run Marble Capital Limited. As Mohammed said, I'll be speaking to us for about 10-15 minutes about ethical investment strategies in Islamic finance, the opportunities and the challenges that we're facing at the moment. I'll be speaking largely from a Nigerian perspective, although I'm going to share with you some of the international happenings as far as Islamic finance is concerned. I would like to start by giving us a bit of background on how Islamic finance has essentially developed over the last few years. Islamic finance essentially started, in 1963, with the establishment of the Mint Gamir Bank, savings bank in Egypt, and that was the first modern experiment as far as Islamic banking principles are concerned. In Nigeria, the first Islamic bank licensed by the Central Bank of Nigeria happened to be Jaiz Bank, as we all know. We've seen Lotus Capital come on board, as the first asset management firm that is focused entirely on Islamic finance principles. We've seen Takaful firms as well. We've seen North Takaful, Jaiz Takaful, Hilal Takaful, and the rest. But I think the most important thing we've seen in Nigeria so far has been the introduction of Islamic investments, and the leading one has been the FGN Sukuk instruments that we've seen. We've had 6 series of the FGN Sukuk. One of it has been fully repaid, and it has shown that that is really the poster child as far as investments in Islamic finance and using Islamic finance principles can be. Globally, if you look at the growth of Islamic finance industry, we are projected to have, currently we have about 2.2 trillion in terms of assets under management, and we are projected to have about 4.5 trillion, by the end of 2024. And this project will even grow as far as 6.6 trillion by 2027. Globally as well, we've actually seen a number of countries playing very, very key roles as far as Islamic finance is concerned. Malaysia has turned out to be the Islamic finance capital of the world, coming up with a lot of innovations and actually ensuring that they have a very strong base, for teaching people about Islamic finance. Now, when we talk about Islamic finance, what are the core principles? What are the core principles of Islamic finance? I'm just going to talk about 4 of them. The first is, it's about risk sharing. So Islamic finance emphasizes equitable risk distribution and discourages excessive risk transfer, to any single party. Unlike what you have in conventional finance, if you borrow money from somebody, it doesn't matter what you do with the money, just make sure you pay, and you pay with the interest. That is not allowed in Islamic finance. The second also is the prohibition of riba. You are not allowed to charge interest on any transaction. The third is ethical and social responsibility. And I think this is very, very important for us. Investments are directed towards socially responsible projects that aligns with financial gains and give positive social impact. I think when we have the fireside chat we're going to have after this session, you're going to learn more about this, how ESG, Islamic finance, they are all aligned. Finally, Islamic finance is about asset-backed financing. All transactions are tied to tangible real assets, and this fosters a stable link towards the real economy. That is really what distinguishes Islamic finance from other finance options. Sorry, I meant to move the slides. Okay, so I've spoken about the 4 key areas of Islamic finance. The next thing I would say is the importance of Islamic finance in today's financial landscape. Islamic finance is growing rapidly, expanding largely from the Middle East and Southeast Asia to emerging markets like Africa. You know, Nigeria, being one of the largest economies on the continent, has played very, very key roles, you know, in the development of Islamic finance. And there are 2 points here that I want us to take note of as we go into this panel session. Number 1, resilience in economic uncertainty and the growing global impact of Islamic finance. We saw during the last global financial crisis how Islamic finance tamed, you know, the challenges of the challenges that most financial institutions had. Most of the financial institutions in the Middle East that operated under the base of Islamic finance were rarely shaken, you know, by all the challenges that we had, the likes of Lehman Brothers, you know, Merrill Lynch, Bank of America, you know, all of them fell through, Fannie Mae, Freddie Mac, and even in our own country, we had all the issues with the margin trading and the like. Now, I want to quickly talk about some of the challenges that's faced Nigeria and the global world in the last few years. The first one has been the post-pandemic economic recovery. We all knew what happened during the COVID-19 challenges, disruption in global supply chains, labor markets, you know, and we've had uneven recovery amongst different countries. The second point here has been the high inflation and currency fluctuations that we've seen literally globally. Each time you have crisis in Ukraine, Russia, you have issues in the Middle East. We saw what happened to the food baskets, that was Ukraine, you know, and now it has impacted Africa and the like. Geopolitical tensions and trade conflicts, and of course, climate change and natural disasters. Someone said to us during the Nigeria Economic Summit that we in Nigeria, we've been largely immune, you know, from global natural disasters that we've seen, but it's not going to be the same anymore, and we should really be ready for it. How will Islamic finance help us to actually be prepared for the kind of flood issues we had in Maiduguri, you know, to all the challenges we're having, you know, in most places as the country is being impacted by global warming and climate change. Islamic finance has proven to be a stable-oriented alternative to conventional finance. I'm going to speak to the capital market aspect of Islamic finance in a short while, but I would like to let us understand some of the components of resilience, given the theme of this conference, that Islamic finance has been able to bring to bear. The first of these 5 has been risk-sharing model, which I explained earlier, with also the fact that it's asset-backed, which makes it up, so whenever you have any challenges in any financial transaction, if the economics aren't working anymore, whether force majeure, whether economic policies, you know you have something to fall back on, the assets. And most times, the assets can give you some reasonable source of backstop. The third is the ethical constraints. More and more people are getting more interested in not just the profit, but how the profit is made. We don't want child labor. We don't want to make money even though the source of it is just by destroying our ecosystem. A lot more people are more conscious of ESG, the people, the planet, you know, not just the profit alone. Islamic finance is giving us all of this and more. The final thing here is on financial inclusion. It's very, very easy for Islamic finance to enhance financial inclusion, either through zakat, either through waqf. You know, a lot of social finance initiatives have their foundations in Islamic finance. Okay, so I would like to speak to some of the investment opportunities that we've had to experience in Nigeria. You know, and I have here a list of about 20 different types of investments, you know, in the Islamic finance, you know, in the capital market. Like I mentioned earlier, we've raised close to 1 trillion naira, you know, in form of federal government sukuk issuances. The good thing about raising money in Islamic finance, especially with the FGN sukuk that I said is the poster child, is that you can actually see the results. You know, the sukuk one that was paid off 2 months ago, you know where all the roads are. All the roads were built, okay? the money that was used towards the second Niger Bridge is completed. If you travel, even on the marina, you will see this was built by using Sukuk 4, Sukuk 3 funds. So people are getting more and more convinced that Islamic finance or Sukuk issuances is the best way to finance infrastructure. We've seen Taj Bank raise a 10 billion Mudoraba Sukuk, 2 years ago. We've seen states, Katsina State, Sokoto State, Gombe State, they've come to the market to raise multiple issuances of Sukuk, either privately or publicly. And we've seen the Alternative Bank as well, one of the main sponsors of this event. They've also been to the market to raise a Murabaha Sukuk, 6.5 billion, which they did last year, and it was fully subscribed. We've seen Lagos State issue a 20 billion Sukuk as well last year to build part of the road network leading to Eleko, Ekpe, and we've actually seen the road being built. So the good thing about Islamic finance is because of the structures that it has, the advisory committee of experts, whatever they say they want to do, they actually get it done if it is fully implemented. We've also seen a lot of mutual funds in the marketplace. You have the Marble Alal Commodities Fund, you have the Lotus mutual funds, you have the ABN Sukuk Fund, you have the Stanbic IBTC Fund, the Alal funds, So investors are having more opportunities to actually invest in Sharia compliance instruments in Nigeria. But it's not just all. There are still challenges. So what are these challenges that we are facing? The most important challenge, I think, is still awareness. A lot of people aren't aware about the opportunities available in the Islamic finance space. There's also the challenge of capacity. Not many people know about Islamic finance, the structuring of Islamic finance transactions, the approval required, this is still a challenge, Even the time required to get approval for some of the transactions from the regulatory authorities, be it SEC, be it PENCOM, be it PHRASE, be it NICOM, there is need for a number of these regulatory bodies to understand a lot more about Islamic finance. And for this, we actually appreciate Takaful for bringing this conference again this year, which I believe is enhancing capacity. Please, let's give it up for Takaful. The pension funds industry in Nigeria today, controls about 20 trillion naira worth of assets. If you try to juxtapose the quantum that's being invested in Islamic assets, it's still very, very minimal. That has to change. So the PFAs need to invest more in Islamic compliance assets. Then also the size of issuances of Islamic finance assets also need to increase. If you are coming to the market raising 1 billion, raising 5 billion, it's not of interest to pension funds that have trillions under management. So we need to grow the market. We need to ensure we have all the necessary bells and whistles. We need to comply with all the regulations to ensure that we do not have challenges with the market as we progress. So let me quickly share some of the opportunities that we think will happen and will enhance the growth of Islamic finance opportunities from an investment perspective. Number one, we need the pension funds regulator to inaugurate its Sharia board. It's extremely important because they have the largest pool of funds. Please inaugurate the PINAC that's meant to cover and protect and provide guidance to investors about issuances that the PFAs are meant to invest in. There are so many opportunities in the green finance space, in the sustainable finance space. We should be able to initiate a lot of green sukuk issuances, and we also need to list a number of our Islamic banks. We have only one Islamic bank listed today. There's nothing stopping a number of the other Islamic banks from seeking listings, on the exchanges to create wealth to a lot more investors. And we also need to enhance liquidity instruments, in the capital market as well. I would like to close by letting us know there is so much opportunities in green investments, in Islamic investments, and in digital technology. If we are able to structure opportunities that allows the commingling of these three key points, we are likely to see a very, very successful sweet spot, of investment opportunities, opportunities that will align with the Sustainable Development Goals, that will comply with Sharia principles, that will provide a lot of institutional opportunities, for investors that are looking at diversifying their investment classes. We also need to speak to the opportunities available in tokenization. We need to allow these instruments to be available to the technically savvy, especially youthful generation that we have in this country. And we need to raise funds across different industries, whether it's in the real estate, whether it's in estate planning, and all of that. I would like to also let us know, that Islamic finance, provides a lot of opportunity for us, to collaborate with fintech and other technology firms as well. And finally, I think there is a need for our industry leaders to advocate for regulatory support and standardization in Africa, to allow people that are investing to know that what they are investing under platform A is similar to what is under platform B, especially ensuring that there is a minimum, basis that everybody aligns with. We need to invest in capacity building for Islamic finance professionals, and institutions also need to consider Islamic finance and Takaful as core components in resilient financial planning and collaborate with fintechs to ensure that we provide all of these opportunities to the investing public. Thank you very much.
Thank you very much, Dr. Iwale, for your very brilliant presentation.
Thanks.
We have roughly about 1 hour for this session. We've used roughly 20 minutes taking Akim's presentation. So the next 30 minutes will be for the panelists, and then I'll open up to the audience for 10 minutes. So you can get your questions ready. So Akim, I'll start with you very quickly. Thank you once again for your brilliant presentation. Ensuring that we're able to opportunities for same with Securities and Exchange Commission, the Central Bank, and even PENCOM, where majority of these assets are sitting. We can't expect them to come to us. We need to go to them. It's very easy. Everyone understands conventional. This is a bit unique. So what are those specific things?
Thank you very much, Mohammed. Yeah, I think there are two key things that need to be done. Number one, there's a body called NIFIAN, which stands for Non-Interest Financial Institutions Association of Nigeria. And that body needs to play a very key role in bringing together all the regulators and the players in the industry. And that's the first step that I think is important. So we need to have maybe a committee set up with NIFIAN members and having a number of these regulators, whether it's SEC, PENCOM, NICOM, and even members of the phrase, to ensure that more and more investments in ethical instruments are available and they meet some minimum standards. I think that is extremely important. The committee can be a standing committee, can be for just 2 years, but they need to play a very key role, ensuring that the leadership of all these regulators and the key players in the industry, they are speaking with one voice. And that is enhancing the quality and the quantity of ethical investment instruments in the country. That's number one. Number two, which I think is also extremely important, is to have a very, very robust strategy for enhancing capacity in the industry. Capacity is critical. Regular training programs, regular conferences like this, minimum knowledge standards that operators must adhere to must be in place, either by the respective regulators or by the NIFIAN itself. But we must have a lot of people actually align with these capacity building structures. And like I said initially, there must also be that committee that is meant to, they should have just a single mandate, of ensuring all these regulators and the players, they are focused on increasing the quantum of ethical investment instruments and ensuring they meet minimum standards and having proper safeguards in case any one of them should go south.
Great. Thank you very much. Taking up the regulatory question, I'll Munir, I think this is for you. It's again on the back of the regulatory question. You have roughly 2 decades of European experience and roughly 2 years in Nigeria now. What, in your view, are those obstacles affecting the growth of Islamic finance, and what unique solutions, based on your perspectives, would you help us prefer to ensure that we're able to significantly improve penetration of Islamic finance products in Nigeria and Africa as a whole?
Can you hear me? Yeah. Yes, good morning. I would say that the challenges that we are facing within the sector of Islamic finance is not really different from the challenges that the conventional finance in Nigeria is facing. I will summarize this probably, let's say, basically we need to stimulate both the offer and the demand. And the key issues that we have are around liquidity. I mean, Dr. Hakim already touched on some of those aspects. I would say liquidity, the offering, unified framework. So taking, for example, asset classes one by one, I'm a portfolio manager. Basically, my job is to manage assets, to create wealth for my investors. So in order to achieve that, I need to have broad range of asset classes, securities that are available. I can invest and unwind easily. So if I look, for example, let's address the 4 main asset classes: money market, fixed income, equities, or real estate. Each of them have an issue. On the money market side, despite the growth we have seen over the past few years, like Dr. Hakim mentioned, the reality is that we don't have enough instruments to play. Okay? There are very few banks offering, beyond the Mudaraba, let's say, there are very few money market instruments. Here and there, some people may issue an asset-backed Mudaraba. Again, I know there are many issues that are on the private side, but we, for example, asset manager, we may have some constraints, and we cannot invest in instruments that are not public. So the private issuances are challenges for us. So we need more and more public issuances. So on the money market side, not enough. Liquidity is low. Not enough players. The demand is not there, so education, like you mentioned, we need this. And obviously, as a consequence of everything I said, pricing is not competitive. That's a reality. So when we are trying even to sell Islamic investment outside of the natural segment, it's a challenge when you have traditional bank placement yielding 23, 24%, and Mudaraba are just yielding 14%. You see, it's a massive gap. We discussed before a few minutes ago also inflation, the situation in the economy. T-bills are yielding, yet they are not at the level of inflation, but they are yielding 25, 26, 27% at some point. But we don't have such instrument on the Islamic side. So we need the government to develop basically T-bills that are Islamic T-bills, or Islamic, yeah. So basically, they can back assets. So that's one. We all need to come together, regulators, government, financial institutions, basically to create a framework that can enhance, incentivize, and so on. Quickly, on the fixed income side, it's the same. Yeah, we have a lot of issuances, but compared to the global market, it's really tiny. Liquidity is an issue because there is no secondary market. So we need to develop, to have a strong secondary market. People are just investing, buy and hold, basically. Obviously, this is not healthy for any financial market. That's one. Yeah, the government needs to issue way more. And we only have, as it is now, only 5 sukuks available in the market. The last one was in October 2023, and it was a massive success. I mean, everybody will remember. The government wanted to raise 150 billion naira. The demand was 5 times, 750 billion. And at the end of the day, they close at 350 billion. Since then, nothing. We have a national governmental sukuk every year and a half, more or less. It's not enough compared to other countries. So that's one. Corporate, we don't have enough public corporate sukuk also. So this is an issue, and as a practitioner again, it creates some other issues related to having enough instruments for benchmarking and so on. On the equity side, on my left, I have the institution which is basically the leader on that side. I'm talking about Lotus. So they have created an index. They are the leader on the market. As it is now in the Lotus Islamic Index, it's only 10 stocks that meets the criteria to be Sharia compliant. We need way more than this. So obviously, it requires for the regulator, NGX, maybe to reach out to some of those companies that have already some criteria that can fit the Sharia. And lastly, to conclude, on the real estate side, as it is now, we only have one instrument that is Sharia compliant. I'm not going to give a name, but it's only one. But nevertheless, I know that there is another one on the road, another real estate that is Sharia compliant. So I would say to bring us to another level, we need to develop the market. So for this, we all need to work together, regulator, government, and the private sector, financial institutions. So those are, I would say, key differences. But again, those challenges, we have them also on the traditional finance. I mean, we have blue chips you cannot sell for months because of the lack of liquidity.
Great. Thank you very much, Manera. Clearly, I mean, we'll go to the market leaders now, Lotus. I mean, you pioneered investment, Islamic investing in Nigeria. And what would you say are those operational hurdles Lotus Capital has gone through? How have you navigated them, and what can we learn from that?
All right. Thank you very much. Audible? All right, great. So it's been a long journey, obviously, about 18 years and counting now. And over this time, we've had a number of initiatives or a number of instruments come to market. Mr. Buba mentioned the equity side. So for the equity side, we started with the Islamic Index in partnership with the Nigerian Stock Exchange. Now, at that time, they were very forward-thinking. They saw it fit to try and expand participation in the equities market through non-interest investment. Yes, we did have a challenge of finding a significant number of securities that would be eligible. One thing that we did was to be very clear on the framework for assessing companies that will be compliant. We utilized the IOFI framework. For those that don't know, IOFI is an international setting body for Islamic financial institutions. We're able to arrive at about, I'll say 15 stocks that time. Over time, a number of things changed. One thing that changed is that some of these entities began to use a significant amount of interest-bearing leverage. On account of that, companies that were previously Sharia compliant became non-compliant. Other companies had a lot of cash within their balance sheet, and they placed them in interest-bearing banks. And because of the interest income they were making, they became non-compliant. So these are challenges that we've experienced. And part of the solutions that we try and advocate for is education to these entities so that they know that they are non-interest investors who are looking at these issues, who would likely not be able to participate in their equities if they do not resolve these matters. As of today, we have about 11 companies that are Sharia compliant. The companies themselves might appear few in number. However, in terms of the size of these companies, in terms of market capitalization, they account for more than 50% of the market capitalization of the Nigerian Stock Exchange. So while we might see them low in number, we're able to still build significant portfolios on the back of these securities. Other challenges that we have seen, not in the equity side, in the fixed income side around Sukuk. A lot of issuers are very used to the conventional method of raising financing. What that means is they like to raise financing for general obligations. Now, when you have general obligations, that can't work for Sukuk financing because, like Dr. Hakim said, it has to be asset-backed. So we spend a lot of time educating these issuers, helping them identify suitable assets that can be used for Sukuk issuance. We have found that it is very important to have trainings for these issuers, particularly within the operating agencies, if they happen to be state-backed, so that they understand these processes, sometimes helping them identify that giving funding to just any kind of contractor can affect delivery of an asset and can affect the compliance of the instrument. On account of that, what we've seen is those who have opted for Sukuk financing have been a bit more diligent in the selection of contractors, have been a lot more diligent in the delivery of assets. And I think during the presentation, we mentioned a number of projects that have been completed with Sukuk. But this was an issue that we had to address that we resolved through training. Lastly, in the mutual fund area, what we realized is once you aggregate people into a portfolio, you believe that by offering them a share-compliant instrument, it will feed every investment objective. However, that's not always the case. So an investor in a mutual fund might still require a short-term investment, might still require a long-term investment and things like that. So we have to make sure that all these investments are suitable for the various investors.
Thank you very much. How has the index performed, the Lotus Index?
I'm happy you're asking me this year, right? So this year is doing quite well. On a price return level, is almost 30%. And some of the stocks that have driven that performance, we have Boa Foods in the index. Boa Foods has done over 100%. We have Okumo Oil in the index. It's also done over 30%. So these are some of the benefits that you have from investing in equities. There is risk in investing in equities, but the portfolio as a whole does do well.
Beautiful. Thank you very much. Yeah, Dr. Bashir, I think over to you now. Since you're online and I hear you're abroad, I think your question will be FX related because that's a hydra-headed monster in the country. How, in your view, can we significantly improve FX opportunities in Islamic finance using real estate as a veritable tool and ensuring cross-border transactions? And also taking into account risk management, ensuring that the cash comes back. It's very important. Can you throw a bit more light on this? And try to do this in 2 minutes.
Okay, that's cool. Thank you very much. Okay, so very quickly, on the one hand, we want to ensure that cash comes back. On the other hand, we want to ensure that you have a charge on the asset abroad, right? Because if you don't have a charge on the asset, it's a problem. And they want to make sure it's also scalable. You can scale it up consistently over a very short period of time, right? And in fact, over a very long period of time too. So what do you do first? You create an SPV right in Nigeria, right? For the purpose of having a note or a sukuk, as the case may be. If it's just financing, or if it's just you want to finance the foreign assets, and you're unable to take a charge on that asset because it's a Nigerian company, a big problem. And if you do take a charge on the asset as a Nigerian company, your charge is null and void in the law courts abroad. Right, so what that then means is that you take a charge, but it's empty, right? So it means you must also then have an entity that sits in whatever jurisdiction you want to offer these notes, such that the transaction is tradable in any of the exchange in Nigeria, CFMDQ. So that's to be tradable because it means that parties should be able and willing to leave whenever they want to leave. So it then means that, based on a lot of discussion with Sharia scholars, and one of the best models will not be an istisna, or a parallel istisna, regardless of the fact that, a parallel istisna gives you the off-take bits, but practically these things fail, from experience, right? It fails a lot, right? So it then means we have to start to explore situations where you are dealing with income-generating assets. I take it again. Income-generating assets that are already generating income. They can then do a diminishing musharaka, whereby you take equity position in the foreign company using a subsidiary entity, right? Such that as they pay down, if you like, a glorified mortgage, to keep it simple. Sharia scholars don't like us to use the word mortgage, right? Want to use it on finance, right? Now, because it's income generating, it could be a commercial asset, whereby the rentals are already coming in. On the back of these rentals, you can then be competitive with the federal government bond, FX bond. Or else, you're going to be investing your money with HSBC Asset Management giving you far below 2%, in Orion Bank giving you 1 or 2%, or even Abib Zurich, right? So for you to get that competitive returns of about 7, 9, even 10%, or even slightly more, it means you have to take a role, you have to play a part in structuring across board and ensure that there's tradability. But there's another very interesting thing that we must know. What is the role of Takaful entities? You know, people have argued that, hey, why is it that you don't even have Takaful companies taking part in this note, this instrument, this structure, whether it's local or it's foreign or both, right? And then, you know, some others will argue that, hey, you know, Takaful companies are not part of the capital market. Again, we can argue otherwise and say, no, but they can play a role. If the asset is income generating, can Takaful companies guarantee the cash flow? Because the income is already defined. Can they guarantee, if you would like, we call it underwriting tool. Can they give an underwriting tool to say, because the income is already confirmed, right? The income is already being generated, right? And we can guarantee that cash flow, which then enhance that note and that instrument. It can be private, it can be public. Of course, you can always go to FMDQ private market to list it so that people can exit, right? Then these structures, again, are scalable. On the back of that 2 SPVs you have created, a local one and a foreign one, right? You can then scale, right? How do you mitigate, you know, stamp duties? You know, that's another story, right? You can take over the company, which gives room to another risk. You are taking over a company abroad, you know, that owns the assets. It then exposes you to other risks that that company has, right? How do you mitigate that risk? You mitigate it by just ensuring that, you know, there are no debts, which can be done quite easily, right? That way, you can even escape the 3% of stamp duty on such assets. So with this way, you can then scale up, you know, and in fact, you can even make it a perpetual asset at some point by adding more assets to the table. But more importantly, is the fact that the locals that have invested such monies can exit easily. They can get their money back on the back of the local SPV. And more interestingly, there are 3 appreciations. Number 1, the fact that Naira is depreciating against FX means that, you know, there'll be appreciation of their funds, number 1. Number 2, capital appreciation of the assets. The asset will always appreciate. Then number 3, rental appreciation of the assets. I'll stop here for now. Thanks, Mohammed.
Thank you very much, Dr. Bashir. As a follow-on question, this morning we woke up to Bitcoin hitting 90,000. Very interesting. So very soon you'll see money moving that way. And what's causing this? 4 years ago, we had an American president left who has just won elections again. He's very bullish. Many of us who were investing or advising investors didn't really understand what cryptocurrencies were. So people bought blindly, but they made money. And then 4 years of the Democrats, we understood that this was literally driven by one man. Today, he's back again. There would be a new world order. Investments will significantly change. How is Islamic financing prepared for this new world order? Because you would then see significant drop in the growth we've experienced within the last 4 years. How well are we using cryptocurrencies generally, or the framework around cryptocurrencies to do investments, and maybe specifically for even real estate, because that's a very clean asset class. How can you throw more light on this? Because we don't want to miss out for the next 4 years. We can hear you. I think
can
you're
you hear
mute.
me?
No, it's for
Can you hear
Bashir.
me?
Yeah, it's for your question.
Oh, mine? Is it mine?
Now we can hear you.
Oh, okay, lovely, lovely. Okay, so basically, Sharia scholars have argued whether crypto is allowed or not allowed on the back of several things. Number 1 is that, is it a legal tender, right? So if it's not a legal tender, then it's not compliant. However, if it meets some of the major conditions, there's no interest, there's no uncertainty, there's no gambling, and there are no issues around unethical concerns, then it can be fine. You know, so other scholars have argued that, hey, this is a global thing. Why can't you just launch the currency elsewhere, in a compliant environment, and you deal. If there are jurisdictions around the world that offers crypto that is compliant, just operate from those jurisdictions. In the UK, for example, today, virtually every young person has a crypto account, and they do a lot of trading, right? So the next is how do you make it compliant? So back to your question, can we have a crypto based on that is asset-backed to make it Sharia compliant, to satisfy Sharia scholars? That, okay, here's the real estate, we have made it Sharia compliant because, there's an underlying asset. And what Sharia scholars would call mal, that is, there's value, right? There's value in it. Immediately there's value in it, and it's aligned with the jurisdiction of that country, then it's good to go. In other words, yes, that can be done. We've done in several jurisdictions. But again, using my first example, on the back of that same assets that we have, right? That same asset can then be converted into crypto, traded in an environment that is allowed, because the government in that country allows such. I know you don't ask this question, but let me then go quickly into tokenization. I know Dr. Hakim mentioned it.
In 1 minute, please. In 1 minute, okay, not more than a minute.
1 minute. Okay, so in other words, tokenization also, in 2012 thereabouts, just around that time, one of the earliest token or real estate tokenization was established. I think in Colorado in the US, basically income generating assets, the hotel projects, cash, income generating already, they converted to allow people to have different bits of that asset. Call it a glorified sukuk if you like, But what has then happened is that it's based on a blockchain that is existing, unlike crypto that is based on specific or a tailored blockchain, right? In the case of so crypto is based on general one, it's a specific one rather, while what was the other one? Tokenized one is based on specific nodes. Now that has been established, and in fact, there was a program in Nigeria 2 years ago where some guys came in from Dubai, and I said this pretty easy. As long as your asset generates income, we can tokenize it for you. The good thing is that it allows, however, the condition in our own environment, it must be tradable. It means that we need to go to the exchange or the exchange that we have in Nigeria and say, hey, these exchanges, can you allow us trade these tokens or this crypto? If that regulation is not established, then we cannot implement it in Nigeria. However, you cannot stop young people from trading in other jurisdictions because it's allowed there. Let me take a break.
Thank you very much. Dr. Hakim, this question is for you, and it's on the back of this whole building the ecosystem for Islamic finance. Robo-advisor is one huge area no one has really explored. We've seen a lot of apps. They're doing money transfers. They're giving you access to trade securities. Robo-advisor, which is literally retail portfolio management, is still a huge opportunity. The Securities and Exchange Commission of Nigeria has actually issued guidelines for this. No one is doing it yet. How can we ensure that, I know you're in the SEC committee, and I don't think you've represented us well. So how can you ensure that we take advantage of this huge opportunity? In the US today, there's roughly 1.5 trillion naira invested in robo-advisors. In Europe, it's somewhere north of close to $140 billion. How can we take advantage of this? And in 1 minute, tell us specifically what we can do to ensure that we're the leaders. Because if we take the initiative, then the investing public sees it as an Islamic finance tool. But the regulations are there, the rules are there.
Okay, thank you very much, Mohammed. And so robo-advisory is something that is becoming more and more commonplace in the developed world. Wahid Invest, which is the largest Islamic investment entity globally, operates largely as a robo-advisor. They got a $25 million investment from the Middle East about 3 years ago. They are in Nigeria, they are everywhere. And all they do is that you do not speak directly to a fund manager. You just select your investment on the robo-advisory platform that they have. Why is it not operating in Nigeria? It's a cultural challenge. Okay, a lot of people still believe they need to speak to someone, especially when it comes to managing their investments. And that is an awareness we need to create. That's number one. Number two, fund managers need to understand that you can simplify the investment options of investors to aggressive, conservative, moderate, and people should be able to invest in any of these three major categories. If you're able to do that and you're able to present it properly to people, that without having to speak to a human being, you can actually make right investment decisions. You get your investment being managed properly, maybe in funds or thereabout. I think we're going to be able to scale up. Yeah.
Thank you very much. I think I would like to open it to the audience now. We'll take very few questions. I know that this is a very huge, very large topic. There'll be a lot of questions, and we've told the organizers to gather as many of these questions, which we'll pass to the panelists. But for now, we'll take very few questions. So just indicate if you have questions. Okay, in front here. Yeah, we have 2 questions. We'll take those 2 questions, and the gentleman over there. Thank you. And there should be short, straight questions. As much as possible, you can direct it to the specific panelist you want to answer.
Okay, actually it's not a question, but I need to pass 3 comments quickly. First one is the one that I need to commend this great panel for the wonderful discussion on the topic. You have really done justice to the topic that was given to you. And I really appreciate the presentation and the discussion on the topic. But talking about what NIPIAN can do and what role it can play for bringing the stakeholders together, the regulators together, I think there is need of putting extra effort for letting them understanding the need of their support in this regard. Because to many, NIPIAN is not doing what they're supposed to be doing. And the reason of constituting this NIPIAN is to facilitate a lot of issues that institutions cannot do it by their own. So now coming together as NIPIAN, they have pressure to put on the regulator, and they have what it takes to approach the stakeholders and let them understand the potential in Islamic finance industry. Therefore, I'm calling with the loudest voice possible that NIPIAN should rise and do the needful in this regard. The second issue I want to just comment on is the potential in the real estate. We said this is the cleanest way of investing money. Looking into the deficit in housing in Nigeria, you need over 20 million units of housing. So this alone presents a huge potential for investment in Nigeria, not only for the Nigerian money and even attracting foreign investors. Therefore, with the well-organized structure, we can get so many issues and so many money coming into Nigeria through this means. The last one, I'm just quickly rushing myself because I don't like to hold you hostage for my comments. It's a comment to Dr. Bashir. I really appreciate his concern about what Sharia scholars would say, and this shows respect for, from his side to what Sharia scholars are having all the time in mind regarding new structures. But I want to assure him that Sharia scholars are never an obstacle to any development. The beauty of Sharia scholars in this regard is that whenever they said something is not in line with Islamic teaching, they are duty-bound to provide an alternative or to make it, halalize it, if I was allowed to say it this way, or this word, to give an alternative or to adjust what is presented to make it Sharia compliant. Therefore, this cryptocurrency is really debatable in some jurisdictions, but not as before, because some jurisdictions are allowing it. Recently, Dubai, they allow this cryptocurrency to fly their market. Therefore, we hope with more effort, Nigeria will see a very solid framework on dealing in cryptocurrencies. That is our prayer. Thank you very much.
Thank you very much. Yeah, the next is, yeah. Thank you.
Thank you very much for this for this section. is actually the...
Please, what's your name? Can you introduce yourself?
My name is Professor Abdul Salam Ismail from Kitme Smart Consultancy. At the same time, is a member of ACE Nur Takaful. So my question, it's not a question, it's a comment on what Dr. Bashir mentioned in his presentation or speech regarding the cryptocurrency and tokenization. This, my belief, since 2017, when the thing started, cryptocurrency and Binance, we can see that during the corona, it's helped a lot. The Islamic finance, I will say, it helped the business at the same time. So that is the reason why there's no way, because this is the future of money. So digital, everybody is now smart. So that is the basis of Dubai government in the UAE. They say that, look, for the regulation, they are the first jurisdiction globally to have regulation on the cryptocurrency and blockchain. So they have regulation on this, and the Central Bank of UAE, they have already issued their own coin, which is backed by dirham. So that is the thing that there's no way. The same thing also for the regulators who are here in Nigeria to have this, because this is the future of money. And in order to make the life of the people easy, so these Sharia scholars, I wrote an article in 2018 on this, that there's no hiding principles which is contradictory to Sharia in the Bitcoin and other altcoin. So that is the reason why that, but in order for you to al-hukm an shay, faru an tasawwurihi, meaning that you cannot say that this one is banned or this one is not acceptable only after you have your research. This is the thing we need to do more in Islamic finance. And the Sharia scholars, they are now, they have opinion on it because they make their mind that crypto and Bitcoin, it is acceptable and there's no any hiding. There's a lot of people on this. And Islamic Fiqh Academy, in last year, November, and July of this year, they have their opinion that there's not anything contradicts Bitcoin and using of it. If the Bitcoin and also blockchain, if it is not, you have to look at the basis of using the Bitcoin itself. No gambling, no anything which is related to, haram in using of it. So it is acceptable. And there's a lot of article and paper on this. So this is the basis. But one of the things that you need to know about this and how the Bitcoin works before you can say it is haram or it is halal. But now, the Central Bank of Malaysia, they have an article on it. Great. They have, so that is the thing that, thank you so much.
Thank you so much, Professor. Yeah, this was another mini lecture. Please, we need to ensure that Professor gets a speaking chance, either in this conference or the next conference, because clearly there's a lot you have to actually share with the audience. Thank you very much. Unfortunately, I've been informed that we can't take any more questions, but the panel will be available. I mean, again, we've coordinated with the organizers to ensure that we delve into this and possibly come up with actionable plans that can be executed so that we're not just speaking. So since we've run out of time, I'd like to thank all my panelists for sharing their advice with us, and also the audience, all those who have asked questions and the entire audience here. Thank you very much for your time. And kindly help me give my panelists a round of applause. Yes. Well, yes, and then now a round of applause for me. Okay.
Thank you very much, gentlemen. and particularly for keeping to time. Before you come off from the stage, if you could just come here very quickly for a quick photograph. And while that is happening, I've got the pleasure of inviting a member of the board of directors at Nur Takaful. Ambassador Shuaibu Ahmed is coming up to present our panelists with awards. I've been informed to request the presence of the chairman of Nur Takaful and the representative of the commissioner at NICOM. And the vice chairman of Nur Takaful as well.
Good afternoon, ladies and gentlemen. On behalf of the organizers of this conference, it's an honor and privilege for me to present this plaque as a token of appreciation for an excellent presentation and panel discussion to Mohamed Garouba. Thank you so much.
Thank you so much, sir. Thank you.
I have another plaque for Dr. Akim Oyewale for his excellent paper presentation during this panel. Thank you so much, Dr. Akim. Thank you so much. This plaque is for Mr. Monir Buba. Thank you so much, Monir. Lastly, this one is for Ndako Mijin Daddy. Thank you so much, Ndako. Unfortunately, Dr. Bashir is virtual, so his plaque will be kept by the organizers. Thank you.
Thank you very much, Ambassador Shuaibu. Please, one final round of applause for our very first discussion today. Earlier, Mr. Garouba had said, he'd essentially described it as the best panel, even though it's a panel that's only just starting the conference. So perhaps by the end of tomorrow, we will have to give him feedback on it. Now, without further ado, I have the pleasure of introducing our next discussion. If you look at your program of events and just go back one step, you will see the fireside chat that's slated for a discussion on the role of ESG in strengthening Islamic finance and Takaful. Both of our panelists will be joining us, both of our discussants will be joining us virtually. Unfortunately, they were not able to make it here in person, but this discussion will still hold. I'm starting off with an introduction of Abubakar Suleiman, who is the Managing Director of Sterling Bank. Mr. Suleiman is the Chief Executive Officer of Sterling Bank, his top priority is to optimize the impact of financial intermediation in critical sectors that can catalyze growth and create a future of shared prosperity for all Nigerians. These sectors are health, education, agriculture, renewable energy, and transportation, and they are the heart of Sterling. Before his current role, he served as Executive Director and Chief Financial Officer of the bank and was the executive sponsor of the bank's non-interest banking business, Sterling Alternative Finance. He holds a bachelor's degree in economics from the University of Abuja and a master's degree in major program management from the Said Business School at the University of Oxford. His guest on this discussion by the program should be the Deputy Secretary General of the United Nations, Amina J. Mohammed. Unfortunately, Ms. Mohammed is not able to make the conversation due to unforeseen circumstances, but her representative is here, the Assistant Secretary General, Resident and Humanitarian Coordinator in Nigeria, Development Coordination Office, Mr. Mohammed Malik Fall. Mr. Fall was appointed by the UN Secretary General, Antonio Guterres, in February of this year. He happens to be Senegalese and serves has over 20 years of experience in development, humanitarian, and peace-building sectors. He previously worked as UNICEF Regional Director for Eastern and Southern Africa, overseeing 21 country offices and leading responses in complex crises. He has held key positions including UNICEF rep in Nigeria, the Central African Republic, and Mongolia. He has also served in senior roles in Haiti, Indonesia, and the Democratic Republic of Congo. Both men are joining us online. I will be ceding the floor to Mr. Suleiman, who will be moderating this discussion. Mr. Suleiman, can you hear us? If you can, you're currently muted.
Yes, I can hear you now.
Fantastic. You've got the floor.
Thank you very much, and thanks for the invitation. Let me start by acknowledging the effort that has gone into organizing this conference. And it is interesting to see how we have expanded both the support base for the conference, but also the conversation. So, Mr. Mohammed, it's nice to have you here. I want to start the conversation by saying that there has always been a need to bridge Islamic finance and Takaful with the conventional financial system, and that we in practice consider the ESG to be a bridge that allows us to connect the two, that makes it easier for people who are in the conventional financial services sector to understand Islamic finance, but also makes it a lot easier for those of us who are trying to build an Islamic finance ecosystem to tap into conventional financial system. This is the view that we have held, but we thought it would be interesting to speak with you. First and foremost, to understand how from a development perspective, and as people who have been at the anchor of ESG, have you been able to make this connection, or is there a different connection that you've made between ESG and Islamic finance, and whether there are specific conversations internally within the development sector as to how we can leverage the synergy between the two?
Thank you so much, Abu. Let me first say that I'm really delighted to join you and join the rest of the participants to this conference, and regrettably could not make it there. I hope that from this online engagement, I'm coming clear, and then people can hear me clearly. Let me also start by saying that I took a challenge, which is to step into the big shoes of our Deputy Secretary General, who is Amina Mohammed, who certainly, if she had time, will put the bar much higher than what I will try to do during this session. Let me also remind a few contextual elements when it comes to ESG, mainly in relation to the environment and to the social impact of development action and to the governance. The contextual elements are, we are in 2024, maybe referring to the year that is the hottest in terms of history and on record, clearly indicating that the trajectory we are in today in terms of climate crisis is not the good one. The second contextual element is that as of yesterday, the COP29 has opened in Baku, Azerbaijan, and we are trying to mobilize and double down in the international community to increase the commitment of nations to preserve our planet. It is happening also in a context where the world is racing against the clock on what we call sustainable development goal. To me, which is really the social contract that anchor the whole notion of ESG, and I strongly believe the whole notion of Islamic financing. The SDG were adopted in 2015, as I say, as a social contract that look at maybe 4 pillars. One being the planet and how to protect it. One being the people and how to protect them. One being the prosperity of the people, and one being also building peace. And now people added 5th P, which is partnership, and which I see as a strong pillar in this kind of conversation that we have today. But if you look at the trajectory we have taken since 2015, the goal was set to be achieved by 2030. But we have been taken back by the COVID pandemic, the economic downturn that has been experienced in many parts of the globe. We have seen conflict resurgence now in the Middle East, in Europe, in Sub-Saharan Africa, almost everywhere in the world, really reminding that with those kind of challenges, we will be facing a big difficulties to be on track. But there is no way, I think, as our UN Secretary General said, I mean, protecting the climate is a moral obligation. It's a moral obligation because this climate doesn't belong to us. It belongs to the future generation. We have the obligation of leaving a legacy of a climate that is much cleaner than what we have done so far. Now, those engagements put together nation into forum like the COP 2019. But what is most important is not the kind of gathering, it is the kind of determination we show, it is the kind of commitment that we show, and it is the kind of step we undertake. Like, for example, now it's almost demonstrated that we have gone beyond 1.5 degree of heat, which is the limit that was put. And how can we go back? It will require a number of investment, a number of engagement that I feel could be part of the conversation. The first one for me is how to transit energy and decarbonization, how to engage in that process and make sure that the renewable energy are using much bigger part into the development process. How Islamic finances, how Islamic banking can maybe provide increased investment in the area of energy transition. Beyond energy transition, if I take agriculture, which is the main economic activities, not only for employment, but also for feeding people. And as we speak, the world is facing a huge challenge in terms of food insecurity. If I take just the case of Nigeria, last week we have published what we call the Cadre Harmonisé, which measure the acuteness of food insecurity in a given country. Nigeria has now hit almost 32 to 33 million of people facing different form or different level of acuteness of food insecurity. If we don't invest massively in agriculture, but invest in a way that is smart, invest in a way that protects the environment, invest in a way that is sustainable, invest in a way that have a kind of social contract with the people who are working in that area, that could be a challenge because there is nothing that is bigger threat to human dignity than lacking food or facing hunger, which unfortunately is a phenomenon that we are seeing. But it's linked also with climate change, because if you look at the main driver of food insecurity today, it is about conflict, as we can see, but it's not only conflict, it's about also climate-driven shock. We have seen flood recently, almost in more than half of the state in Nigeria. We have seen drought affecting almost all the ecosystem, which is part of the northern part of Nigeria. We have seen heat wave. We have seen water reserves declining, like the Lake Chad, which have lost almost 70% of its water reserve in the past 4 decades. Now, how can we invest in a way that protects that asset that we have, that protects the environment? How can we make sure that when we invest into job creation, when we invest into development, when we invest for the betterment of human being life, we make it in a way that protects the environment, we make it in a way that is sustainable, and we make it in a way that really works for the prosperity of the people. Because one thing is also need to be highlighted as one of the global challenges. It's not only conflict, climate crisis, but it's also poverty and deeper inequality that is faced almost across the globe, and for which we have seen also how it's affecting so many people in Nigeria. Maybe let me keep it there, Abu, and then we move into the conversation based on those backgrounds which give the area in which you work, and as I say earlier, protecting the planet, protecting people, promoting prosperity, promoting peace, and promoting partnership, which are the 5P I referred to earlier. Back to you.
Well, thank you very much, Mohammed. I think this gives a very sound background to the conversation. But before we move on, you said something that I think is quite deep. And you said that protecting the climate is a moral obligation. It is safe to say that the political system has failed to convince the people, or has neglected to convince the people, that the climate is a challenge for us and something we should be worried about. As we have seen in many places where people have actually voted for candidates that have very little regard for protecting the environment. My question here is that, is it possible, should we be engaging spiritual leaders across all the major faiths to turn them into advocates as the people in the forefront of convincing the general population that the climate is a crisis for everyone and that they have a moral obligation to do this? And if this is something that we should be thinking about, how would you advise that we go about moving this from the political space, hopefully to the spiritual and religious space, where there is still some level of trust between the leaders and the led?
Thank you so much, Abu. I think you have touched really, you hit the nail on the head in the sense that religious and traditional leaders, faith-based organizations are what I call in today's world probably the biggest influencers in terms of driving people toward desirable behavior, driving people toward peace, toward social cohesion. Now, in this endeavor, including a messaging that is really looking at how, as we human beings, can invest more to protect the environment, is something in which I see them having a key role. And for me, everything that is affecting, and when in the SDG we talk about partnership, that's what we meant. We meant that, we mean that it's not only government that have the responsibility of addressing and tackling the challenge, but it's all segment of society. And when we talk about society, there is no segment that is more important than the traditional and the religious leaders. That's one aspect. The second, when it comes to moral, I wanted to highlight two dimensions here. I refer earlier to the generational obligation that we have as people living in today's world, the obligation we have to leave a legacy for future generations to be in a world which is livable. I think that intergenerational obligation and moral dimension is important, but there is another dimension in terms of equity and moral obligation, which is also, if you look at today, what has brought the environment and the climate to where we are, it's mostly due to industrialized countries. Let's just be honest and face it. I can say that if we count like the sub-Saharan African countries, the weight they have in the global emission as we speak is less than 5%. But look at the kind of price they are paying for example, the degradation that we see in the environment and the climate. I refer to earlier to flood, to drought, to heat wave, to loss of water reserve. All of these consequences are deepening poverty and suffering in the sub-Saharan Africa. But if you compare the kind of level of burden they carry to their contribution to the global emission, it's almost nothing. Then those who contribute to bring the planet to where it is, are the ones who have the moral obligation of paying or putting more resources to support those countries to be more prepared to face those shocks to, once they face those shocks, to have resources that help them to get back on their feet. And once they get also, what can they do to prevent those shocks to come by maybe engaging into energy transition, engaging into smart agriculture, putting on innovation that can create green and clean job for young generation who are army of young people who needs to get into the labor market. Those are the aspects for me which are really touching the issues of equity, the issue of moral, and that obligation is to everyone in society, first and foremost, those who have bigger influence on people, and that's where I come back to your question around religious leaders, but I think also world leaders or developed nations that have brought the planet to where it is today, and that contribute to more than 90% of the global emission, have also the moral obligation to invest. And when we talk about the fund of loss and damage, if you remember COP28, the opening day, we say, okay, we pledge $100 billion. But where is those $100 billion? You can be in Baku and announce billions of dollars, but for the herders whose ecosystem is completely destroyed in northern part of Nigeria, how to unlock those funding? For a farmer or for a fisherman who have been working around the Lake Chad as a main livelihood and see conflict and see also the shrinking of the lake, devastating almost under his eye or her eye, the livelihood support that this lake or this nature was providing, where is this funding? This is the kind of aspect that I call moral dimension into our engagement into ESG, but into also financing, which look at equity, which look at how we address this issue. Maybe just last point, because we are in financing. More and more also, the whole issue of the global financing architecture is being discussed as a question. And I guess that in the next G20, in some of the fora that the world will organize, we will come to that. Because the inequity or the moral dimension in the financial architecture also need to be looked at. Look at, for example, the credit rating agencies, how they rate sub-Saharan African countries. If they want to access to finances or to funding, look at, for example, the kind of challenge they will face. Look at how the debt burden is now almost challenging all countries in the sub-Saharan African continent to be able to invest on their people, to invest on their, protect their environment, to invest on addressing or alleviating poverty. All of these issues should be also part of the conversation. And this instrument was built in the aftermath of the Second World War, at a time where most of these African countries were not independent. And now we are in a time where we need a financial system which brings in bigger equity, which balance also a much bigger, in a much stronger way, the relation between nations, and which is not 80 years old like when we were in the aftermath of the World War, but which also reflected the world as it is today. And I think that's what makes also this movement around Islamic financing, this movement around the voice of the Global South to be heard, to bring and to be taken into account. That also is a kind of equity and moral dimension that we need to have as a part of the conversation. Back to you.
Well, thank you. Thank you very much. There is a question that if I don't ask, my colleagues in the industry, in the Islamic finance industry would be very upset with me, so I'm going to ask it. Islamic finance and Takaful is at its infancy on the continent. A lot of effort has been put into starting it off in a place like Nigeria, places like Gambia. There are places like Sudan where it's a little bit more advanced. But every industry that is at a starting point usually would require some level of support, sometimes from government, and hopefully one that has been identified to play a significant role in development should be able to expect support from places like the United Nations and the World Bank. I guess my question is that, shouldn't we be having a conversation at this point where, as we rethink the financial services industry and how it works for the poor and for emerging countries, shouldn't we be putting resources either in terms of impact studies to demonstrate the value or the relative value of Islamic finance and Takaful, or even providing some of the social intervention through Sharia compliant means that then allow participation of this emerging fledgling industry, if you will, given the relative size. Isn't this sort of thing that one could expect of development institution, especially at a time where the world is increasingly bipolar and we cannot necessarily count on anyone to come to the aid of these countries or to support these ideas that are proven to work for development?
Yes, if you look at now the Sustainable Development Goal, which are the 17 goals to be reached by 2030, and which I call also probably the biggest social contract that exists in today's world. Look at, poverty alleviation, elimination of hunger, promote health, promote education, promote gender and women's empowerment, look at the environment, look at partnership, look at building robust institutions. This can't be undertaken, as I said earlier, by only government or state entities. I think the non-state entities, including the private sector, are extremely important. And within this private sector, Islamic financing is appearing as one of the strongest. I happen to be a Muslim. I happen to belong to a country which is dominated by 95%, which is at 95% Muslim country, and where, for example, the conversation also around Islamic financing is growing. And I feel that, yes, we need to invest and look at what kind of contribution Islamic financing can bring. Because what I feel is important is that every area where we think that investment or where we think that resources allocation can help to better the people's life in terms of well-being, in terms of access to all those issues that I have referred to with regard to the SDGs are extremely important. And another aspect of financing also I was talking about, it's the credit rating, and it's the rating that sometimes is not helping or supporting. That can go for nation, but it can go also for private. I see sometimes banking system putting their rate at a level where no one can using those interest rate and at the same time make a profit when you, for example, take a credit from those banking system. And at the same time, also banking has to accompany also the innovation that help people to make a quantum leap. We have seen recently the innovation, and in a country like Nigeria, by the way, every time the people talk to me about Nigeria, I say, unfortunately, when you look at the headline about Nigeria, people insist mostly on the challenges the country are facing. And I don't know why people don't invest or don't look at the potential of this country. And the potential are not only the natural wealth, but I think the biggest potential and the biggest asset of Nigeria, it's people. It's people in terms of resilience, but mostly it's people in terms of innovation. Someone was telling me that probably 25 to 30% of the startups that exist in sub-Saharan Africa are based in Lagos. Now, those startups to prosper, they need support, they need credit, they need a banking system which have products that help them to go through those kind of innovation process. Now, what role Islamic financing can play if there is any engagement or any commitment that a study that is jointly supported by government, by World Bank, by UN, or promoted by UN, of course, we will be most delighted to be part of that process because, as you say, that might open an avenue that show maybe this financing modality will be much fit better to the need of the young people or to the need to support innovation process rather than maybe another modality of financing. And I see this area into agriculture, into energy transition, into opening green job and clean job for young generation. And that's what the world future is today. The world future is not back to fossil fuel or back to those kind of energy that are polluting the environment. Now, how can you prepare the young generation, not only in terms of education, but support them also to access to innovation space or that can help to accelerate those undertakings? That's where I see that UN and any other entity working in the development front is ready to support any study that can help us to understand and better understand how Islamic financing can increase impact for the betterment of the people. Maybe let me keep it there.
Thank you very much. And I'm sure everyone in the audience have heard, if there is a study or an opportunity for research that can validate what we already know and therefore make it easier for us to attract more investment into this space, please do not hesitate to put the ideas forward. I round up by asking, you've had over 20 years of humanitarian work and peace building across all over the world. And you would have seen a lot of financial instruments that would have been used in some way to support the work that you do, either in government to government space or in private sector. What are we missing in Islamic finance? What do we need to do so that when financial instruments are being looked at towards solving the larger developmental problem, what do we as participants need to pay attention to? And that would enable us become part of the conversation when this private sector solutions and sometimes government solutions are being put forward.
Yeah, that's true that you refer to the number of places where I worked and where not only I have been able to be part of the humanitarian assistance delivery, but also I have witnessed also human suffering, because you work in the postmortem of those big conflicts. There's one thing is that you are assisting people to save their life, reduce their vulnerability, or help them to be back on their feet, or enhance the protection. But you experience also and witness a level of suffering that really sometimes you don't believe could exist in this world. Sometimes you see also really ugly face of human being, because in conflict you see them perpetrating violence that you cannot believe that one can do to another. But coming out of these years of experience, I feel that whenever I see a humanitarian crisis, I believe that the shock that triggered the humanitarian crisis is just a form of exacerbation. But the root causes that create that humanitarian crisis were there. And always two examples comes in my mind. In 2010, I was deployed as one of the first part of the team that went to Haiti after the earthquake of January 2010. It was like few seconds, you lost 250,000 lives in the capital city of Port-au-Prince for a earthquake of magnitude 7.2 in the Richter scale. At the same week, the same intensity or level of earthquake hit Santiago, the capital of Chile. Probably they had maximum 100 deaths. In that same period, also you had 9.2 earthquake that triggered a tsunami in Japan that even affect a nuclear plant. But you see that the number of deaths was just like few hundred or less than 200. And then if you compare it to Haiti, it was 200,000, and it was also over 1.5 million people displaced. That clearly shows that if we want to reduce the impact of shock on people's lives, we have to invest on development. As long as you leave people into fragile situation, whatever shock or regardless the scale or the level of the shock, whatever shock they will face will have drastic consequences. And my learning is that how would you prevent that? It's you prevent first conflict by promoting peace. It is you prevent also, or you invest in development so that the structural issues or the structural development deficit are addressed before a shock comes, because otherwise there is no point that when the shock of the same scale hit these people, their number of deaths is counted in hundreds of thousands, while the same scale of shock affect another country and you are just talking about few dozen. That clearly indicates that that lack of preparedness and that lack of prevention is the area to go. And if I look at Islamic financing, by the value of Islam, by the value of peace that is taught by Islam, by certain core principle on Islam in improving people's well-being, I see that that space is a space in which Islamic financing has to play a role. It has to play a role in building, strengthening, and promoting peace. It has to play a role in building, promoting, and strengthening prevention. It has to play a role in building and strengthening preparedness for a shock. And if you have those three determinants, most of the time when it's a shock, because no one can avoid a shock, but when you get a shock, the consequences are not as severe as the one that I have experienced throughout my career by working in DRC, in Haiti, Banda Aceh after the tsunami, or Afghanistan in the middle of a conflict, or CAR in the middle of conflict. And that's my takeaway after decades of serving in those things. And this is why I'm saying Islamic financing is most welcome into the space of prevention, into the space of peace building, and into the state of preparedness in the context of addressing disasters and humanitarian and human suffering. Back to you.
Thank you. Thank you so much. We are out of time, so I'm going to wrap up by saying there are three critical things I would like us to take away from here. One is that the current financial system is unfair not just to us as developing countries, but also sometimes unfair even within countries. We should build a financial services system that is based on principles that will promote fairness. And this is something we have a chance to do because we are starting afresh. We also should remember that the real influencers are sometimes not necessarily the political people at COP29. Sometimes they are the traditional rulers, and sometimes they are just the young influencers on social media. And so we must also connect with them as we try to build a new way of doing things. And finally, there is opportunity for us to work with development finance institutions to support us in making the case for Islamic finance and Takaful. And on the back of that, we are then able to hopefully expand and grow the work we are doing. So thank you very much, and thank for your time. Mohammed, thank you so much for taking the time to talk to us, and we truly appreciate your insights.
Please put your hands together.
Thank you so much. It was a pleasure to be with you. And my regard and great.
Mr. Abubakar Suleiman, MD of Sterling Bank, and Mr. Mohammed Fall, who is the Undersecretary General, Assistant Secretary General, Resident and Humanitarian Coordinator in Nigeria at the Development Coordination Office of the United Nations. And just before we go off to the next item on our agenda, I want to take a quick moment to let us know that we do have an audience that's been following online. And if you would like to share the link to the conference to other people who might be interested in joining, they're going to put up on the screen very quickly what you can browse, what you can search on YouTube and on Facebook. If you just search Nur Takaful Insurance, it will pop up and there's a live stream there. For those online, during questions and answers, you can put your questions in the Q&A box and we'll take them at the end of each panel. Having said that, without further ado, I'd like to welcome to the stage one of the sponsors of this year's conference. We have Alternative Bank, who happens to be, they have representatives who are here in the room and will come up to address us very quickly.
Good afternoon, ladies and gentlemen. I'd like to stand on existing protocols. My name is Mohammed Bashir Yunusa. I work with the Alternative Bank. I take this opportunity to welcome all of you to this year ATNIF conference. And first of all, I'd like to congratulate the team from North Takaful for putting yet again another milestone event. Can we all please give them a round of applause, please? There has never been a better time to deliberate about the micro and macro alternative to the situation we all face as a people, both locally and globally. So it's almost as if it's the perfect time for the team that came up with this conference by Takaful. And I hope we're able to deliberate about initiatives and options to move we as a people forward. We currently deal with high interest rates, economic volatility, and market uncertainty. And Islamic finance, as we know it, is an opportunity for us to rethink these things and do things differently. It's almost like jumping that Chinese wall we all know. These are tools that we can use to innovate and create for a better future. And then when you talk about Takaful, which is essentially community-based risk sharing, there is no better term or tool that says be your brother's keeper more than Takaful. So that's why I think this is such an important event, and we are very, very much pleased and happy to be part of it. And we're hoping this will give all of us in the industry, because the NIFI industry is still a nascent industry, and we have an opportunity to deliberate and create solutions, innovative solutions that would move us as a country, the nation, and the world forward. Once again, I welcome all of you, but before I leave the stage, I have a parting gift. We have some welcome packages for our travelers and would-be travelers. So if you walk out, on your way out, stop by the Alternative Bank stand and pick up your card, which is an invitation to the Alt Club. Thank you very much.
All right, so without further ado, we'll go into the next discussion for the day. Collaboration and partnerships for sustainable Islamic finance and Takaful. That's the next conversation that we'll be holding. And I have the pleasure of introducing the moderator. Just a reminder that I will introduce the moderator. When he comes on stage, he will introduce his panelists and the speaker. The speaker will make their presentation. The panelists will have a brief conversation, and then we'll have the Q&A from the audience. Without further ado, our moderator for this session is a seasoned chartered accountant with 30 years of experience. He's managing partner of Ahmed Zakari & Co., where he leads a team of over 50 professionals providing full-spectrum accounting, audit, taxation, and advisory services. Actively involved in the global accounting community, he has served on the IFAC board since 2019 and is a former president of the Institute of Chartered Accountants of Nigeria. He brings deep expertise to his role as a non-executive director and chair of the Audit, Risk and Compliance Committee at Nur Takaful Insurance Limited. Please join me in welcoming Mr. Ismaila Zakari.
Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Good afternoon, everyone. It's my pleasure to welcome you to this session on collaboration and partnerships for sustainable finance and Takaful within the broader theme of the conference, the ATNIF conference of building resilience in a volatile world. As we delve into this session's discussions, we recognize that Takaful Insurance rooted in mutual cooperation and ethical principles, offers a unique model for fostering resilience and sustainability. By aligning with principles of shared responsibility and financial inclusion, Takaful holds vast potential to address the needs of underserved communities while contributing to broader goals like environmental sustainability, poverty reduction, and economic stability. As the global focus sharpens on achieving the United Nations Sustainable Development Goals, Takaful Insurance can play a crucial role in supporting goals like SDG 1 on no poverty, SDG 3 on good health and well-being, and SDG 8 on decent work and economic growth. We are fortunate to have with us today a distinguished lead speaker who will shed light on this. And it is my pleasure to invite to the stage Dr. Tariq Saif. Dr. Tariq is the Executive Director of the Financial Services Institute and the Egyptian Institute of Directors. With 20 years experience in insurance industries, Dr. Tariq has extensive experience in underwriting, in Takaful, risk management, and international insurance programs. He is a respected author and has contributed to key texts on Takaful, including Principles of Takaful and Takaful Technical and Operational Aspects. Dr. Tariq Saif is also an experienced trainer, conducting seminars, courses across Africa and the MENA region, and focusing on skills development for insurance professionals. Welcome, Dr. Tariq. Following Dr. Tariq's presentation, we will hear from 3 esteemed panelists, each bringing unique perspectives on the subject. It is my honor and pleasure to introduce our 3 panelists and invite them to the stage. First, Mr. Michael J. McCord. Mr. Michael McCord is the Managing Director of Micro Insurance Center at Millimar. Michael was here last year. He's a leading expert in microinsurance with decades of experience in developing and managing products for low-income populations. Welcome, Michael. His career includes roles as bank controller, CEO of microfinance institution in Uganda, and in 2000, Michael founded the Microinsurance Center, now called Microinsurance Center at Millimar, which aims to provide microinsurance solutions to 3 billion low-income people globally. Michael has contributed significantly to this field through research, advocacy, and the creation of tailored microinsurance products. He has held leadership roles in various organizations, including Microinsurance Network and the United Nations Capital Development Fund. Michael has worked in 80 countries around the world, leading projects focused on risk management solutions for low-income clients. Please give Michael a resounding applause. Our second panelist, Ms. Mariam Ibrahim, is the Managing Director of Inverness Wealth Management. In her role as Managing Director of Inverness, Mariam oversees operations of a boutique investment advisory and fund portfolio management firm, which manages assets exceeding 3.5 billion naira. Mariam serves as non-executive director on a number of companies in Nigeria, including Nur Takaful Insurance Limited, and she is an active capital market participant. You're welcome. Last but not the least of our panelists is Hajia Zainab Abdurrahman, a graduate of economics from Ahmadu Bello University. Hajia Zainab has over 30 years experience in oil and gas sector, particularly at NNPC. Her roles included overseeing NNPC's investments in the capital market, serving on boards of joint venture and oil servicing companies, and establishing NNPC Retail as an independent subsidiary. Hajia Zainab Abdurrahman is currently the chair of Jaiz Takaful Insurance Limited and a director at Jaiz International Halal Certification Limited. Please join me in welcoming Hajia Zainab. You're welcome. I assure you that our session will be enlightening, and I encourage everyone to listen with rapt attention and take away actionable ways in which Islamic finance and Takaful can contribute to our sustainable future. Thank you very much, and I now invite our lead speaker, Dr. Tariq Saif, to begin his presentation.
Okay, thank you, Dr. Ismail, and thank you. First of all, I would like to thank the Noor Takaful company for organizing this conference. Actually, I consider this conference as an annual testament of our collective commitment toward developing a Takaful industry and zero interest economy. My presentation today is on the partnership between Takaful and sustainable Islamic finance. Actually, I would like to start with some thoughts from Islamic, from Quran and from Sunnah, from history of Islam to support the concept of sustainability. So Islam supporting the sustainability is a very important part of Islamic thoughts and the Quran as well. First, this is a Quranic verse saying that وَإِذَا تَوَلَّى سَعَى فِي الْأَرْضِ لِيُفْسِدَ فِيهَا وَيُهْلِكَ الْحَرْثَ وَالنَّسْلَ وَاللَّهُ لَا يُحِبُّ الْفَسَادَ. It means that some people, they spread mischief and destroy the land, the plants, the palms, and the livestock. This is totally against the Islam. Also, the other one, preventing any eating or drink out. I think the presentation is not clear here. Please, can you display it again, because the lower part of the slide is not clear for people. It's hidden. Anyway, in Quran we will find many evidences that Islam is against destroying the environment, using the economic resources in a wrongful way. Supporting the concept of sustainability. Also in Sunnah, simply what is Sunnah? Sunnah is the saying of Prophet Muhammad, actions of Prophet Muhammad, and any tacit approval taken by the Prophet Muhammad. Also Prophet Muhammad preventing cutting palms, cutting trees, and encourage the protecting environment in many hadiths, in many sayings, but the Prophet. Historically, we have what is called the hema. What is hema? Simply, hema is that Prophet Muhammad used to prevent hunting during certain time in certain areas with a 4-mile radius, or preventing cutting trees or plants within a 12-mile radius. Why? Simply to protect the environment, to prevent destroying the economic resources. So we have a lot of evidences supporting the concept of sustainability in Islam. Even during the war, Prophet Muhammad preventing cutting or burning palms or trees. So this is the theoretical framework of sustainability in Islamic thoughts. For Takaful, we know Takaful is an insurance. What is different between Takaful and conventional insurance is a process. Process in Takaful should be Sharia compliant. So if we keep the product Takaful with a Sharia compliant process, so we will have a Sharia compliant products at the end of the day. because I usually summarize the difference between takaful and the conventional insurance like a piece of beef or a steak. Is it halal or haram? Simply, it depends on the slaughtering process. If the slaughtering process is a Sharia compliant, so the final product will be halal. If the slaughtering process is not Sharia compliant, the final product will be haram, prohibited. So this is the takaful. Takaful is an insurance mimicking the final products of conventional insurance industry with a Sharia compliant process. When it comes to the sustainability, insurance have a great and pivotal role to play in sustainability and sustainable development. Now I will go through some of the economic sustainability goals, SJZ, and I will explain what is exactly the role of insurance. The first goal is to prevent poverty, no poverty goal. So insurance had a great role to play here by introducing inclusive insurance and microinsurance. And fortunately, we have the godfather of microinsurance today, Michael McCord. So he will elaborate more in microinsurance and its role in supporting sustainability. The second one of SDGs is good health and well-being. Insurance also play a pivotal role in achieving this goal by providing medical insurance cover, micro-medical insurance, and healthcare support. The goal number 2 is zero hunger. We have also a role to play in insurance by having inclusive insurance and NatCat insurance, agriculture insurance to protect the agriculture industry, which is has a very crucial role to achieve the second goal of the sustainable development. Gender equality, also life assurance, endowment life assurance, education fees, property insurance, and health care for the breadwinner women are very essential. Insurance also can help in creating decent work environment and economic growth by supporting credit and finance, replacing assets after disasters, having an ethical and green environment. Also for climate action, Takaful can support by having a NatCat insurance pool, natural catastrophe insurance pools and the covers, agriculture insurance, parametric insurance, which support dealing with the climate change and green economy. Also, insurance has indirect role to play because by achieving these objectives, we support the industry, innovation, and the infrastructure. We support quality education. We support sustainable cities and communities. Also, reduction in inequalities and creating a partnership for the goal. Takaful company has many role to play in creating a partnership with Islamic banking, with Islamic finance, with the microfinance institution, with international institution to support the sustainable economic development. To achieve these objectives and help in sustainable finance, Takaful companies has to embed the ESGs clearly in their overall purposes and the business strategy. We know that the business insurance and the Takaful business are a double business. Insurance company work in two legs, underwriting and investment. So we have to embed ESGs in our underwriting strategy, risk appetite, claims process, and in investment as well. So helping sustainable finance by insurance, The first pillar of the Takaful role in helping the sustainable finance is underwriting and risk appetite. So by supporting the sustainable projects, sustainable business, supporting the environment. So insurance company, first of all, is microinsurance is very important for this. Insurance can offer some incentives for responsible customer behavior, sustainable projects, sustainable performance in terms of price cutting, discounts, profit sharing. So this is definitely will support the sustainable finance. Secondly, increase support to the renewable energy construction and generation activities. Again, by having more relaxed risk appetite, discounts, lower premium rates, lower deductibles, and more convenient claims process, settlement process. Also, innovative products. Takaful company has a role to play in product development. Like developing products for carbon credit insurance. Many multinational companies, they develop the products for carbon credit insurance, and I think this is very important to be tackled by Takaful companies to support the environment and sustainable development. Environmental friendly claims settlement process by repairing, replacing with environmental friendly materials and items during settling the claims and repairing the damaged assets. Like in motor insurance, we have a lot of application in having an environmental friendly claims settlement process. Enhancing and supporting parametric insurance for climate change risk and agriculture sector. All of these measurements are enabling the concept of sustainable and responsible finance, and all of these measures can be taken easily by the Takaful companies if they believe in the sustainable development and can include the sustainability in their strategic view and programs and the guidelines. Also, insurance company as an investor can support the sustainable finance, again by having the environmental, social, and the governance SGZ objectives must be embedded in the Takaful company strategy, ethical, sustainable, and responsible investment strategy. And everyone knows that Islamic thought and the Takaful are believe on ethical investment and the green investment. It is a very important part of Islamic thoughts is to have a responsible and ethical investment by preventing riba, usury, ambiguity, gharar, jahala. So these prevented and prohibited elements should be removed from the investment. Also, as I said before, that supporting and protecting environment is a very important part of Islamic thought. So all of these Quranic principles, Sunnah principle, historical evidence should be translated to procedures to be taken by the Islamic finance and Takaful as well. Again, a carbon credit here as an investment, not as a risk carrier. So insurance company can play double role with the carbon credit. The first one as a risk carrier, the second one as an investor by trading in carbon credit in the capital market. I put just some general ideas to trigger the discussion and dialogue, and I would like at the end of my presentation to thank you and thank Noor Takaful again. Thank you.
Thank you, Dr. Tariq. Thank you very much. We now go into the discussion with the panelists. And I would like to start with Michael J. McCord, who is a micro-insurance specialist. And Michael, how can micro-insurance initiatives when aligned with Takaful principles, contribute to broader sustainable development goals, especially in the light of SDG 17? And what role do collaborative partnerships play in this, in achieving the impact?
Thank you very much. And thank you for that insightful presentation. Thank you. So let me say that when we think about Takaful principles, the principle of risk sharing, the principle of ethical social responsibility, this is what should be fundamentally insurance and Takaful. So this fits so incredibly well with what we need to do, is be thinking about how do we help people to protect their own risks in terms of ethical treatment, ethical products. We all know products that are out there that are not ethical, that we would not consider ethical. They're not fair, they're not good, we make people buy them often. What we have in Takaful is an opportunity to have better products serviced in a better way under those fundamental principles. And I think that's incredibly important for us all to think about how we do that, whether we're traditional insurers or Takaful insurers. I think we have to think about these principles. All of us should be doing that. And that this is so embedded in the fabric and the DNA of Takaful, this is important. And I believe that it makes Takaful the best opportunity for people if we have good products. Okay? And then in terms of goal number 17 and the partnerships, I think that what we have to be looking at is the ultimate goal is to create more resilient communities. How do we work with others? And so that includes governments. How do we work with the government to make sure that we're doing something that facilitates them, or they at least know what we're doing so that they can do things that are leveraging what we're doing. We have to think about where's money coming from? Donors, zakat funds, foundations. How do we work with them to make sure that we are providing those kinds of products that are socially responsible, that are risk sharing? How do we help to do that? And how do we help them to achieve their objectives? Because if the broad objective is around resilience for low-income people, which I think should all be a top objective of all of us, if that's the case, then we should be working together. We work with the World Bank, we work with other donor institutions, the African Development Bank, all of these groups, the Islamic Development Bank, all of these groups should be working at least in cooperation so that we can be more effective. I've seen so many places across the globe where we have multiple entities doing things that actually damage what the others are doing. Seriously, that actually damage what the others are doing. We have to work together, and partnerships now have become more important than ever because of climate change. Climate change, which is exacerbating many of these issues. We're expecting assistance and funding from others. We have to be focusing much more on partnerships. We have to be thinking about how do we leverage those from all parts. How does this one leverage Takaful? How does Takaful leverage that one? And if we do that, then we can be successful. But the partnerships are critical, and efficiencies through partnerships are critical now when there's less and less money.
Let me ask you another question. Having visited around 80 countries around the world, what practical forms of partnership or frameworks or models have you seen or would you recommend for Takaful operators or Islamic finance operators in Africa, to aid collaboration and success?
Yeah, I've seen I'm just going to give you a kind of appetizer right now because I'm going to talk about this in the next session. I'm sorry. But if we start to think about risk management in general and not just the Takaful component, how do we help people to protect their families? How do we help them to protect their animals, their crops, not just pay them when those things go? So we're going to talk about that extensively in the next section, but this is an important way because there's other organizations that are doing those things. If we can bring that together, and again, think about risk management and resilience and not just the Takaful products.
Thank you, Michael. I go to Haja Mariam. How can Takaful providers collaborate with capital market participants to build sustainable Sharia-compliant portfolios that not only generate returns, but also support long-term environmental and social goals?
So I think the good thing is I think the session before have spoken quite a bit about investments in the non-interest space. So I think maybe what I'll just add to, what I think, I remember Bashir, I heard Bashir talk about some kind of investment linked to Takaful, which is good. But I think what is key is, so the large, consumers, the large retail investing group within the country would probably feel more comfortable with a Sharia-compliant instrument, as opposed to, an ESG, which, I mean, as we heard him say earlier on, these naturally, the ethical, Sharia compliance are ethical, and they align with, ESG factors as well. So I think what would be key is, obviously bring in more products into the market that sort of align with that, and, how can, the capital market participants in general, incorporate that, into what we already do. But I think what is key is really, there are products, but they're just not, enough. I think that most of the products that are that we have, the non-interest compliant products that we have in the market, to an extent, to a large extent, are actually compliant. But how do we, how do we bring in that Sharia component? I mean, I remember someone, actually mentioned that the Sharia is actually very key, but how can we help? I think that would be very key within, the investing arena. It would be that component. It's how do we enlighten ourselves? How do we get those in the Sharia scholars in all of that environment? How do we get them to understand that these ESG factors do align with that? And how do we sort of promote, that together as a group, is what is key. But I think most importantly, obviously, I think NIFIA is doing a lot, and I think we as capital market operators as well can look at, other areas that we can, develop, products that are suitable and sort of sustainable, for the general populace and the environment generally.
Thank you. I take another question for you, and it has to do with, how can we ignite the interest of capital market operators to, focus on the Islamic finance market in terms of helping to build partnerships for mobilizing funds towards Islamic finance, especially using the ESG principles?
I think sort of key, I think the first key thing would be sort of a lot of knowledge sharing, capacity building, within, the market. I know there's a lot of that. I mean, we've advanced greatly from where we were, a few years ago. As we all know, if we've got, I think maybe five federal government sukuks. We all know those were greatly oversubscribed. I think we probably have one or two corporate, sukuks in the market. I mean, those as well, were oversubscribed. But I think what is key is the first thing would be that capacity building, inclusion, and general knowledge sharing with everyone. I think secondly, and I think key, and I think the other panel actually did mention it, is all the stakeholders have to be involved, the regulators, which we can't overemphasize. We need, they as well, we need their support, and we need them to, be up to scratch with, what is going on globally, as well as how that affects, the environment in which we operate in. And I think key as well will be collaboration with, global institutions, institutions globally, all over the world, and see what is being done in different jurisdictions and how we can bring that in and localize it and see what kind of impact it would have, with developing, sustainably compliant, non-interest products, for the investing public in general.
Thank you, Hajia Maria. I go now to Hajia Zainab Abdurrahman, who is the chair of JAIS Takaful. And Hajia, how can Takaful operators across Africa form collaborative partnerships to drive growth of Takaful market in the region? And what specific strategies would you recommend to overcome market barriers and enhance public awareness?
Assalamu alaikum. So, I hope. Assalamu alaikum. Thank you very much for that question. I think listening to Tarek, Michael, and Mariam, there's been a lot of emphasis on partnership, making sure that we're focusing on our ESGs, focusing on the community, and making sure that we're doing the right things in a way that is Sharia compliant. There's a lot of discussion around partnership in order for us to be successful. What exactly is partnership? Partnership is about collaboration. It is about synergy. Partnership is key for the success of our industry. If we're able to create good, sustainable partnership, there's a lot that we can benefit in the industry, and Nigeria, and of course, Africa at large. Having good, sustainable partnership will help to create sustainable relationships. We will have operational efficiency. We'll be able to enhance our risks and manage the way we practice and manage our risk. We'll be able to develop new products, strengthen financial stability. As a result, we will have good customer experience and we'll be able to address new risks. If you take the example, of course, of developing new products, if one of us is able to develop a product that is good for the industry, then there is no need duplicating that effort. I think we can then all key in and share the knowledge so that we can focus on other things. How do you create partnerships? You create partnerships by collaboration between Takaful operators, between the reinsurers, between banks, fintech, regulatory bodies, and of course, the relevant associations within the industry. Partnership benefits. You have better protection for your participants. That's from the participant point of view. From the operator's point of view, you will have increased efficiency. And for the regulators, you'll have a better oversight function and improved stability. The communities themselves will also benefit as they will now be able to have access to financial services. But sometimes there are challenges in forming these partnerships. But every challenge isn't a problem. Sometimes those challenges are what creates the opportunities for all of us. Therefore, from the point of the regulators, as already indicated, being able to enhance the process of approvals and coming up with new products and stuff like that, and forming the general framework within which the industry operates. But this shouldn't be a challenge, because we can then focus on it if we have good partnership with the regulators, so that we can standardize and make sure that the process is efficient. We can, of course, also look at the issue of awareness of Sharia services, be it finance or insurance. I know the industry in Nigeria is doing a lot, but there's still a long gap, a very big gap between the awareness of what we're offering. But it is good we had Sukuk, because Sukuk brought a lot of attention to Islamic financial products and the benefits to the country at large. And I think it helped to a great extent to take away those ideas that Islamic finance or Islamic industries is about Islamizing the country. I think they're now able to see that it benefits everybody. So at least that was able to be addressed. It will also, you have some issues with technological innovations. I already discussed that. If we're collaborating properly and effectively, we'll be able to direct little money that we have in making sure that we're looking at the different technological issues that affect the industry. We also need to make sure that we're being Sharia compliant in the services that we offer. Therefore, in order to succeed, communication is key. We need to have shared goals and objectives. We need to work together as a group. We need to flow together in the same direction. We need to be able to design and manage our risks. We need to have measurements, very, very important, because a lot of times why organizations fail is because you're putting in processes in place, you're not measuring to see how successful you are, and you're not looking at areas in which you need to improve. So measurement is important in order for us to be able to continue to improve our process.
Thank you. Thank you, Hajja Zainab. One of the important points that Dr. Tariq made in his presentation, which I took away, is that Takaful operators must embed ESG into their purpose and strategies. From a governance perspective, what sustainable practices can Takaful companies adopt? And how can partnerships and working with regulators, professional bodies, and industry associations support these efforts?
From the governance perspective, in order for us to be successful, the TICs, that is the Takaful insurance companies, need to adopt consistent and sustainable practices. We need to make sure that we're being Sharia compliant in the things that we're doing. For example, when we had the challenge with supply of Naira in Nigeria, it seems like ages ago now, but it's also actually very recent. I was very pleased because a lot of people, again, were able to have greater trust in the Islamic financial services sector, because you found that some of the banks that were actually honest in supplying the Naira that they had was Lotus Bank and Jais Bank. And a lot of people were going around and they were saying, you know, you go to the other banks, they're hoarding the Naira that they have. But if you go to Lotus Bank or if you go to Jais Bank, and I believe to some extent Taj Bank, they were not hoarding the money. And so every day, whatever they had, they were able to make that available to their customers. So that in itself was able to create trust in the minds of the population. So we need to be able to make sure that we improve our partnerships. What are some of these practices that we need to make sure that we're working on in a sustainable manner? We need to improve compliance with governance practices in line with Sharia doctrines. We need to improve risk management and internal controls. We need to have transparency. We need to make sure that we're improving and working very hard on the ESGs, which Tariq had already mentioned. We need to make sure that we're keeping our customers as the number one consideration, and that they are our everything and they are our first consideration. We need to be working to make sure that everything we do is centered around them. We need to make sure that we're seeking the best talents. As we all know, getting the best talents in the industry is becoming a real problem with the Japa syndrome. And as you get more and more Takaful companies being set up, it increases the competition. So you find that as much as you're trying to work together as a group, a new Takaful company comes in, the first thing it does is to poach staff from existing Takaful companies that you have spent time and money to try to train by offering them higher positions and higher income. So this in itself can create a problem. So seeking best talents is an issue within the industry, which I believe we shall come together as a group to look at how we can build on that. And I believe Mariam also did touch on that earlier. Now, in order for us to improve partnerships, we need to have good collaboration with our regulators. We need to also work very well with our professional bodies, the industry associations. We need to increase investment in research and innovation. We need to share best practices, and we need to bring in new innovations, be it in the area of software, in the area of new products, whatever it is that will enhance the industry. When this is done, you find that you create trust, you improve the risk management skills within the industry. We're able to access new markets. And in turn, we create benefits. What are these benefits to us? You have improved joint research. We come together, we pool our funds together, and we undertake those research activities that would enhance the industry. We make sure that we're really and truly collaborating and working together. We need to have joint advocacy efforts. We need to be collaborating with the working groups. I know we're already doing that. You have association where the MDs of the Takaful companies are coming together and discussing issues that affect the industry and are also related back to the regulators in that respect. So we need to continue to do that. And in terms of collaboration and working together, for us in Jais Takaful Insurance, we're 110% very supportive of Nur Takaful and all of the other Takaful companies. And that's why we support them also in this laudable initiative of the African Takaful market. And Jais Insurance is also looking at forming this sort of conferences level so that we can continue to complement on the wider scale for Africa. We need to make sure that we're working very well with all of the other regulatory bodies, whether it is IFSB, IOFI, IIFM, Islamic insurance companies, NICOM, CBN, CERC, and the rest of them. So what is important is that we make sure that whatever we come out with, implementation is key. We're working together by setting up joint groups. We're developing the strategies that are needed. we're implementing sustainable best practices. We're making sure, again, that we're measuring, because the measurement is extremely important. So the challenges that we have around the talent gaps, balancing social and commercial objectives due to the restrictions when you comply strictly with the Sharia doctrines, dealing decisively, and correcting those organizations that tend to bring some sort of bad reputation to the Sharia industry. We believe that if we're doing all of this, we're making sure that we're adopting best practice, we're measuring, we're making sure that we're honest and very effective in our partnerships, and that these partnerships are working as intended. We believe that it will have a very positive effect on the industry as a whole. Thank you very much.
Thank you, Hajia Zainab, and thank you to the panel. I am told that we can take only 2 questions from the floor and 1 question from online. So please, can we have indication for any question? I see a hand over here. Please say your name and ask your question, address it to any of the lead speaker or any of the panelists, please.
My name is Abdullah Ishwaib, a non-executive director on the board of Jais Takaful Insurance Limited. My question is related to the section that we had before this, so I'm going to join them together because we are still talking about the issue of the ESG. Unfortunately, one of the regulators, the representative of the commissioner, I'm not sure is in this hall, maybe has left. The question I want to pose before the panelists, first and foremost, is to what extent can we, the Takaful operator, come out in the public space, such as this conference, to say that in our operations over the last couple of years, we have been able to impart significantly, taking into consideration the ESG principles, so that when we come to conferences like this, it is important for us to bring case studies so that we are living the 4 walls of the academic environment into the field. So let us have case studies of the operators. To what extent can we say that our ESG principles have impacted positively in the space where we are operating, e.g., Nigeria. Nigerians are going through a lot of tough times in this particular period that we have. So it is not only limited to the Takaful, but I'm also speaking to the financial, to the Islamic banks as well. We are posting humongous figures of profit after tax. We've been able to increase our gross revenue, whatever. At the same time, on the other hand, the multidimensional index chart is rising, so which is a contradiction. So that is my first poster. The second one has to do with, I think, the first section. I did not have the opportunity, but if the panelists are still with us, we can shed light. The second one is, how could the Takaful operators in particular, not the banks, Takaful operators in particular, exploit opportunities vis-a-vis the Fund 6 structure of PENCOM, particularly when we know that PENCOM has the fund that runs into trillions the framework that is on the front border has not been able to create an environment where Takaful operators can tap into such an opportunities. So this is a question for the regulators. To what extent can they support the nascent Takaful industry to grow, just like other financial institutions? The last but not the least has to do with the issue of the Islamic social finance, which I'm sure Mr. Mike mentioned briefly while he was addressing us, on how Takaful operators, on how the Islamic banks can all pull resources together to provide social impact in the environment where they are making billions year in, year out. And lastly, is that I think the issue was also on the first panel, where there is this assertion that Takaful operators are mostly classified as micro-insurance operators. And we know, as Takaful operators, that we are composite companies, organizations. We do what the conventional insurance also do. But if the regulators could go a little bit to support the Takaful operators so that they can also grow, rather than classifying them as micro-insurance operators. By doing this, they are limiting the opportunities the Takaful operators could tap into in order to bring about
Thank you, sir.
Thank you very much.
Thank you. There is a last questioner. Yes, from the back.
Hello, good afternoon, everyone. My name is Abdulwasi Yankala Kozim, a representative of Trust Arthur Asset Management Company. Yeah, I would like to ask some questions as well as make some contributions.
Please ask just one question.
Okay. If you restrict me to ask just one question, then I have 5. I don't think it would be fair enough for us to be participatory in this event because there hasn't been enough opportunities to ask questions.
I'm sorry, but you have to take just one question, please.
All right, thank you. First, I'd like to make this simple contribution, and that is in the area of...
Please ask a question.
Yeah.
Not a contribution, please. Ask your question.
Okay. Please, I'd like to ask that NIFIAN as a body, I don't think there has been enough participation of stakeholders in the organization. I am fortunate to be a part of the technical committee, but a number of times you don't see representation of these non-interest financial institutions in their activities. The participation has been quite low, even in the banks that happens to be in the forefront of Islamic finance. But I don't know if there is anything that the insurance company is doing to be part of this NIFIAN association. Please, I would like us to always be part of the event.
Sorry, which association is this?
NIFIAN, non-Islamic financial institutions. The participation, so because the participation of all these stakeholders is very low, we don't see them drive enough efforts.
Okay, so if I take your question, you want to know why there is a lack of participation in non-interest finance institutions association, isn't it? Yeah. Is that it? Okay, thank you. There is one more last question, please, at the back. Please ask just one question. Can you give him the mic at the back, please? The man standing over there.
Good afternoon, everyone. My name is Najib Mahmoud Abdul Salam. I'm the MD CEO of Trust Energy Infrastructures Limited. My question is around the ESG. All the conversations we had from the first panel and the second panel have been discussing about sustainability. and the instruments provided by not only Takaful but even the Islamic banks, to support ESG in our society. But interestingly, the discussions has only centered on your governance principle. I didn't see or hear where such instrument has been designed to provide like infrastructural development and what have you. Outside the scope that supported road constructions and similar things like that. But outside that, I didn't hear you talking about an instrument that has been provided for a financial source of financing to support such kind of things around ESG. Thank you.
Thank you. So if I take that question, you are saying that in this discussion today in our session on sustainability and collaborative partnerships, that we have concentrated more on the governance side, and you have not heard much about financing instruments that support ESG and so on. And I will address that question to Dr. Tariq to answer, please.
Yeah, thank you for this question. Yes, actually, I focused on the governance framework of supporting sustainable finance. However, for installments, there are a lot of installments supporting the concept like Islamic Sukuk. But for Islamic Sukuk, we have to screening the activity itself, that the activity, sector, industry are meeting the SDGs guidelines. Also, there is carbon credit. Carbon credit is a financial instrument traded in the capital markets today, and they are Sharia compliant as well. Actually, meeting the sustainability objectives by Islamic finance institutions are not easy. It is not easy because in Islamic finance, all investment must be Sharia compliant, and I know Takaful companies facing some obstacles and some problems to have enough Sharia compliant investment installment to invest all money available. So if the investment will pass two filters, the Sharia compliant and sustainability, so the mission will be more difficult. But so far there is some installments in the market meeting the post-sustainability and Islamic compliance. And I will take a short note from the first question that banks and other financial institutions have to work together with Takaful companies to develop a holistic strategy for Islamic finance to be able to support investment in Takaful companies, like Takaful companies support the risk carrying and risk transfer and risk management in other Islamic financial institutions. Thank you.
Thank you, Dr. Tariq. I will pass the question of Abdul Wasiu on the Non-Interest Finance Institutions Association to Hajia Zainab, who is the chair of Jai's Takaful Insurance. So Abdul Wasiu is saying that he doesn't think that the Takaful or Islamic finance operators are actively involved in the participation of in the Non-Interest Finance Industry Association. I'm not sure about that association. I don't know whether Hajia, you know about this association.
Yeah, I think in talking about areas that we needed to collaborate with, I did mention that we should be looking at those associations within the community and within the country and Africa at large that have things to do with insurance, but are currently not included as much as they should. So we should be looking at those insurance companies and their associations and also looking at the communities as well and making sure that we're partnering with them and that we're working with them so that we can move together in synergy. But just to add very quickly on the issue of the ESG, I think it's a good thing that it's come up a lot in this conference. And I believe when we form those groups that we were talking about earlier, they need to be coming out with making sure that we have the ESG policy development for the industry. We need to make sure that also when we set up those policies, we're measuring them and assessing the risk and managing them properly. And another way to do it, of course, is to make sure that we're investing in green products. So, but I think that's something new. Even in the larger industry, people are grappling with ESG development goals. But I think it is something that we in the Islamic finance and Takaful industry need to take seriously and come up with a policy that we can discuss with the regulators and then begin to improve on it. Thank you.
Thank you, Ajay Zainab. And the last question, I will pass it to Michael. And the questioner, the first person here, asked that Islamic banks and Takaful companies are making good profits. And how can they, Islamic finance, using these profits, how can they provide social impact on the society? I think, Michael, probably you will help us address that question.
Thank you very much. I think that if we're thinking about good profits, hefty profits, then what we should be doing is thinking about expanding our product line, providing better value for clients. There should be a reasonable profit, a fair profit when we're talking about, or a fair surplus when talking about micro Takaful. I think that more money, in many cases where I've seen this, more money should be going into research and development so that they can develop new products, so that they can really understand what the issues are for the market, and to move into a more client-centric approach. Oftentimes, not always, but oftentimes when I see lots of profits, it's often linked to another product. It might be embedded, an embedded product. And here, what happens is we're not very careful about making sure that we're adding value. So there's a huge amount of social benefit that we can offer just through our Takaful operations. But we need to make sure that we're creating value. And many times, that's not what I see. Do some more research, do some more product development, talk to your clients more, provide better value.
Thank you, Michael. And with this, we come to the end of this session. And it's now my honor and pleasure to once again thank Dr. Tariq Saif, our lead presenter, and our panelists, Michael, Mariam, and Hajia Zainab, for all your insights and contributions to the session. Please give them a big round of applause for this. Thank you very much.
Another round of applause, please. If you could come to the front here for quick photographs. And while they're preparing for their photographs, I would like to invite to the stage a member of the board of directors at Nur Takaful Insurance, Dr. Wan Zamri. Dr. Zamri will be presenting plaques to our panelists today. Nifian was mentioned quite a few times in the Q&A of this panel. Nur Takaful is happy to let you know, if you check your program of events for tomorrow, we are expecting to hear from Nifian. They will be addressing us at the start of the day. But also, it's very important that the questions we have from previous panels, thankfully, we do have time to interact with some of the panelists. You might be able to put your question to them. But putting a question from a previous panel for another panel might not work because you might not get the response you're looking for. Having said that, Mr. Garba earlier came around and mentioned that it's really about one person driving these changes and initiatives as opposed to the organization. Okay, very quickly, we're going to be presenting you with plaques. We'll start off with Dr. Saif. Dr. Tariq.
Thank you, Mr. Tariq, for your excellent presentation on the ESG. I think it's a lesson for all of us in the Takaful industry to take stock. And because I think we are still far away from really digesting and adopting this concept, which is, like it or not, sooner or later we have to adopt it and make it our practice. So thank you for your excellent presentation. The next one will be Hajia Zainab Abdul Rahman, chairperson of Jais Takaful. So again, brilliant presentation on the topic. We need to talk more on this topic by the Takaful players in Nigeria and globally also, I think, and we can maybe perhaps we in the Takaful industry in Nigeria can become the promoter of ESG in Africa. We have a good growing industry. I think we are the right place to promote this idea of ESG in our industry.
Thank you
so
very much.
Again. This one is Haja Mariam. Thank you very much for your participation.
Thank you very
much. We need more people from the capital market to contribute to ESG because most of our funds are invested in the capital market, and without the collaboration with the capital market, I think a lot of our efforts to contribute to ESG will be stunted. We need to really have a close collaboration with the capital market players. Thank you. Well done. Mr. Michael McCott, well done for your, and I thank you for your effort, for your great work for promoting micro Takaful and of course ESG. 80 countries worldwide, globally. This is a real honor for us to have you here in Nigeria and to grace us in our conference here. We look forward to more collaboration with you on this one. Thank you very much.
Thank you. It's my
Thank you.
honor.
Thank you. Thank you. Thank you. Last but not least, Dr. Ismaila, my colleague here, he says for his brilliant and excellent moderation of this quite interesting but difficult topic, basically, to discuss. He has handled it very well, and we congratulate him. Thank you. Thank you.
Thank you, Dr. Zamri. All right, at this point, I would like to introduce very quickly to the stage another one of our sponsors who will be addressing us very briefly. We have representatives from Lotus Bank in the room.
Good afternoon. My name is Moshood Oyewale. I work with Lotus Bank. It's a pleasure to be here today. We want to use the opportunity to thank Takaful for this very good discussion today. And it's been a wonderful discussion. And if you look at what is happening on day 2 too, you'll know that there's every reason for you to be here tomorrow and bring every other person that would contribute to this type of discussion here. I would just like to say briefly that the micro Takaful is an area we can continue to partner and collaborate between the banks, Islamic banks, and the Takaful institutions. There's still a lot we could do, and that is one of the rare opportunity for us to touch on the social part of the ESG. I will continue to do that. Like you know, Lotus Bank is the third non-interest bank in Nigeria, while the first two started in the north, we started in the south, and today we are proud to say we are in five of the 6 geopolitical zones. We're covering the last one anytime very soon. We have over 54 touch points, branches, and other touch points. We're here, we have our stand, just there as part of the sponsors. Our products are there, diverse products. We would continue to collaborate with everybody, all the stakeholders within the non-interest finance space, and we're glad to be here. Thank you so much for listening to us. Thank you.
It seems at this point I do need to give a reminder. Please, it's very important to keep the aisles clear. If you're going to have a conversation, we ask that you step to the side. You can go into the exhibition area, but it's very important to keep the aisles clear so that you don't disrupt the flow of movement. Thank you. All right, without further ado, our third panel discussion today is on enhancing economic stability for low-income communities. I have the pleasure of introducing Olani Yusuf, who's managing partner and lead social sector practice at Veraki Partners. Mr. Yusuf he works with a company that's an African business solutions company focused on accelerating development and transformation across the continent. Before assuming this role in April of 2019, he was the country managing director of Accenture Nigeria for 9 years, between 2010 and 2019. Mr. Olani began his career back in 1991 at Joint Computer Company and later joined Arthur Andersen's management consulting division in 1995. With over 30 years of experience, he's a respected transformation expert, advising C-level executives on strategic change and digital transformation. He also happens to have played a key role in developing infrastructure for Nigeria's banking industry, including projects such as InterSwitch, the CRC Credit Bureau, and the Cashless Lagos Initiative. Please join me in welcoming Mr. Olani Yusuf to the stage. He's the moderator for our conversation.
Hello, all right. Assalamu alaikum warahmatullahi wabarakatuh. Thank you all and good afternoon and thank you for your patience. We're getting to a very interesting session which is focused on micro Takaful, enhancing economic stability for low-income communities. I'd like to start by calling our keynote speaker, Mr. Michael J. Marcord, who is the Managing Director of Micro Insurance Center at Milliman. He's a leading expert in microinsurance with decades of experience in developing and managing products for low-income population. His career includes as a bank controller, CEO of a microfinance institution in Uganda, and he has worked in over 75 countries, leading projects on risk management solutions for low-income clients. So please help me join in welcoming Michael Marcotte to the stage. I understand you will take the last seat. You're welcome. So join us in this interesting discourse is Malam Zubairu Darazo from the regulator. He's head of market conduct and policy, including financial inclusion at the National Insurance Commission, that's NICOM. Zubairu is an experienced insurer and an Islamic finance expert with a background in underwriting, regulations, and pension fund management. He holds a BSc in economics and an MSc in Islamic banking, finance, and management, and is currently pursuing a PhD at the International Islamic University in Malaysia. Welcome, Zubairu. Thank you. My other panelist is Mr. Mamadou Musa Diouf, who is the MD West Africa Takaful Limited. So it's coming from Gambia and will be sharing the regional experience. Mamadou Musa Diouf is an highly influential figure in the West African insurance industry with over 35 years of experience. And like I said, he's the managing director, CEO of Jais Takaful Insurance PLC in Nigeria, and the founder of Takaful Gambia Limited. Mamadou, please. In 2020, we launched the West African Takaful Limited, aiming to expand Takaful services across the region. You're welcome. Any of the seats. And last but not the least, my brother and friend, Dr. Jubril Salahuddin, the founder of the Nungu Business School, is a prominent figure in Islamic finance and management with more than 30 years of experience in finance, banking, consulting, and academics across multiple countries, including Nigeria, Kenya, Ghana, and the UAE. Jubril has worked with organizations like the Islamic Development Bank and the Central Bank of Nigeria, and he has a diverse private sector career in Islamic banking, FMCG, insurance, oil and gas, financial technology, and academia. Please help me welcome Dr. Jubril Salahuddin. All right, so thank you all. I think we'll yield the floor now to Michael to start with his presentation that will set the tone for the discourse.
Thank you very much. Assalamu alaikum.
Wa alaikum salam wa rahmatullah.
Yeah, thank you. Thank you very much. The clicker?
No.
I thought it would be here. No. The clicker? Okay. Good. So what I want to talk about is enhancing value, enhancing economic stability for low-income people. Yeah. And so doing that through micro-takaful, right? This is a critical element of sustainability. A couple of years ago, I know we've talked about sustainability a little from the other speakers, but a couple of years ago, we, Milliman, my chairman and myself, we got a call from the head of the United Nations Development Program, Mr. Akam Steiner. He says, we're trying to work on the SDGs, the Sustainable Development Goals. We've already seen them. We're trying to work on those, but what we realize is that we'll never achieve them unless we have good insurance products, good Takaful products, good risk management for people. So even the UNDP realizes the importance that we all provide in this market. This is foundational. I would argue, and have argued for 20 years, that we cannot have sustainable development without good risk management, without good microinsurance, without good micro-Takaful. And if we can get sustainable development, then we've achieved something. If we can help uplift our lower income people, they become our middle income people. They become our clients of the future, our members of the future. This is critically important, and we hold the key. How do we do this better? So what I want to talk about today is more about how we do this better. I'm not going to spend much time here. My good friend, Dr. Tariq, did such a nice job talking about the SDGs. I think I could never match that. So I'm just going to move along. The Takaful principles, these fit directly into what we're trying to do with covering low-income people, right? The mutual responsibility. We are sharing the risk. We're not transferring the risk, we're sharing the risk. We have cooperation, right? The critical nature of cooperation, helping each other, okay? We're not paying premiums, we're paying contributions, right? And protecting one another. So this is groups of us helping each other, and that's facilitated by the Takaful providers, you folks. So it is incumbent on us to make sure that what we have are good products, good services that are actually helping them. And so let's talk about this. If we talk about what's micro-Takaful, right, we've got products that are Takaful products that are specifically designed for the low-income market. What does that mean, that they're specifically designed? Why don't I just take a Takaful product and reduce the coverage and reduce the contribution? Why not just do that? Because low-income people have different needs. They have different needs in terms of not just the price and the cover, in terms of how they manage their money, in terms of how we help them to manage. They need maybe different kinds of contribution periods. They need different kinds of covers. They have different risks. We may all face the same issues, right? We hear about floods and storms and all this stuff, especially with climate change coming now. But these low-income people, they face these risks in a different way. They're living in places that are much more vulnerable. Their health is often much more vulnerable because they're not able to take care of themselves. So how do we help them as Takaful providers? I want to start by stepping away from strictly Takaful and strictly insurance. What I want to say is what we need to start doing more is looking at what we call risk management 360. Right? No matter how good your insurance is, no matter how good it is, a woman doesn't want her husband to die. A farmer doesn't want his crops to die. A family doesn't want their kids in the hospital. How do we help them with this? And this is a place where we need to think, especially when our principles are principles of ethics, principles of fairness, principles of caring for one another. We have to start thinking more about this risk management 360, about helping people to be able to avert the severity of these issues. This also helps us because oftentimes we have products that people don't feel they're interacting with, right? If you have a family Takaful product, right, it takes someone to die before you get a coverage, right, before you get a claim. But if we can do this, if we can help them to keep their families stronger, then they're going to have linkages with us. They're going to have touch. So let's think about risk management 360. We want to help people to reduce the risk. We want them to be better at retaining the risk when they have to. And we want to share the risk. I know it says transfer the risk. I meant to say share the risk. We want to share the risk amongst our people. Okay? Now, I want to spend a little bit of time talking about SWAV. Okay, how many of you have heard about SWAV before? 1, 2, 3, 4? 5, 6? Okay. Because what I want to think about is the fundamentals of how do we get our clients to become more resilient? How do we get clients to pay for our products? How do we get them interested? Okay? We need to have suave products. Suave is simple. It's understood. It's accessible. It's valuable. It's efficient. Suave. Okay? Simplicity. Simplicity will help your clients, your members, to want to be your members, will want to have other products that you're offering. If we want to build a market, we have to do this through simplicity. Understanding. Isn't it ethically responsible to make sure that your clients understand what they're paying for? It's ethically responsible. We have to do well at making sure that our clients understand what it is they're buying, how it works. Okay? This is important. It has to be accessible. They have to be able to access it. They have to be able to purchase it easily. They have to be able to get information on it easily. They have to be able to get their funds when they suffer losses easily. We can't make it difficult. Again, we have an ethical principle here. So, like I said before, I think that Takaful is like the perfect kind of risk management tool for people because it's in the principles. I have to tell insurers, I have to tell them, you know, what's your role? Your role is to pay claims so that people can manage their risk. I don't have to tell you that because it's in your foundation, it's in your DNA. What I'm saying is think about this more. How can we help people more? So, has to be accessible, has to be valuable, has to be what they need. And how do you find out what they need? You find out what they need by going out and talking to them and understanding them better. Doing surveys, doing focus groups, but understanding what they need. We go out and we talk about what's your risk? What risks do you face? How do you face them now? My risk is that my wife will die. I face it now by, I don't do anything. If it happens, then I have to get money, I have to bother my friends, I have to sell things. Maybe there's a better way. That's where we can help them. We can help them to become more stable, to become more resilient, okay? But we need to offer value. If we don't offer value, doesn't matter, okay? Doesn't matter. Okay, and then finally, it needs to be efficient. If we're going to have a product with a contribution amount that is small enough for people to be able to pay, yet valuable enough for people, then we have to be efficient with our administrative costs. We have to look more at technology. We have to look more at ways in which we can act more efficient. So look at process mapping. How can we save money in the way that we do things? Okay, so this is suave. Now, I would argue that what we need here is we need suave plus Sharia compliance. Sharia compliance is what builds in that ethical component. It's what builds in the risk sharing. It's what builds in the connection with what you're doing. Okay? And so that's what's going to lead to successful micro-Takaful. Last year, how many of you were here last year? Last year, you'll remember that I talked about how being Takaful isn't enough. And there's way too much of that where we put something out and say, it's Takaful, so come and buy it, but it doesn't work. Takaful Sharia compliance plus suave, this is what's going to make you successful. Okay? This is what will help build resilience. This is what will help make stronger clients and stronger people. We need a client-centric approach with Sharia compliance and the principles. Okay? Let me just talk about 3 quick examples, which are, frankly, or honestly, not necessarily Takaful programs, but they're programs that happen within Islamic countries. So Jordan. Jordan, we did a health product. We went out and talked to everybody. All the women, well, thousands, a couple thousand women we talked to find out what are your risks, how do you face them. So there, even though what happens is the government, there's a king's fund and a queen's fund and the government and others, they will pay your hospitalization. So, problem solved, right? No. What the low-income women said is that when something happens that requires hospitalization for my kids or my husband, I have to go there. And I have to be the caretaker. Because you can't just drop your kids off and then go home and do whatever you want to do, like we do in the US, right? You have to be there, you have to be the caretaker. So we developed a product that looked at, okay, how much money is she losing? And how much is it costing her to be in the city? So she couldn't do it before, even though the fee was paid, the cost of the care was paid. She couldn't get there, she couldn't lose the money, because that money is part of what feeds the rest of her family, right? So we developed a product that fit there. That's what we need to start doing, is thinking more and more and more about how can we solve the problems that these people have. Look at Pakistan. We're doing some product in livestock. Livestock are dying because in Sindh they have the Indus River that goes right through. Who's here from Pakistan? Pakistan? Oh, sorry. Anyway, so they have the Indus River that goes through, and when it flooded in 2022, it flooded and people woke up in the morning and realized, my house is flooded. They didn't get a warning. They didn't know it was coming. They should have. And then their animals were drowning or floating down the river. Okay? So think about, what do we need here? Yes, we need an insurance policy or a Takaful policy, but what we also need is, how do we get information to them before their animals are dead? It's much better if you can keep your animals alive than if they die and you have to replace them. It's much better. Let's think about, how do we keep things alive? How do we keep things healthy? And then, yeah, one more. I talked about this last year, so I won't do that this time. I won't force you to listen again. So, yeah, that's some of that. And then just some recommendations for moving forward. Think about Suave. How do we implement Suave? Look at the products you've got. Are your products simple, understood, accessible, valuable, efficient? Are they? Look at it. We have tools that can help you, just let me know. Needs to be community-based. This is the essence of Takaful. We need to ensure that the regulations are up to date. There was a little bit of discussion this morning when the Deputy Commissioner was here about the regulations. We need to make sure that the regulations are facilitative and not restrictive. Facilitative, but not restrictive. We need to think about digital expansion, innovations. We need to think about technology. Innovations, again, are going to come from talking to your clients. Understand their needs, and you'll come up with innovative products. And then a member-focused approach. A member-focused approach. Always thinking about clients. So we go out and we do this initial demand research, and we find out what the gaps are that they have. So we put together a product. Then we go back to people and we say, okay, this is what we understood from the work that we did. Does this make sense to you? Does this really satisfy your need? Okay, yes, no, we make more adjustments. We go back and we start to look at marketing. How do we tell people about these products? Because we have to have it understood, right? Has to be understood. How do we do that? We go back out to the market and we talk to people. What is it that makes you want to put a contribution here? What is it that makes you want to be a member? okay? Talk to your clients. Okay, so just finally, just remember, if there's nothing else you remember from me, suave. Who can say it? S? Simple. Simple, yes. U? Understood. Yes. Accessible. Valuable. Yep. And efficient, yes. Thank you all very much.
Thank you, Michael. I think we'll all go home with suave.
Excellent.
And thank you.
That'll make me very happy.
Excellent. So maybe I'll start from there and ask Mr. Mamodu. So Michael has talked about suave as a way to think about developing Takaful products. But you can share your experience with us in terms of how should we go about developing products that will be valuable to the customers and that will meet their needs, knowing that micro Takaful is about the poor who have less than $2 a day. So how can we go about designing such products that will ensure that the poor can patronize and benefit from micro Takaful?
أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم السلام عليكم ورحمة الله تعالى وبركاته. First and foremost, one would once again thank the Almighty Allah for bringing us back to this hall and to thank Nur Takaful for this obligation that they have taken, which should be everybody's obligation, to spread and create awareness of the importance of Takaful and non-interest banking. I think, yes, it's a worthy cause. You're spending a lot, but this is the only way forward. This is the key to really helping to spread and develop this new idea. When we come to specifically talk about micro Takaful, yes, my brother has said it all. Visiting 80 countries, he lived a meaningful life, and we continue to pray for him to continue to live until 150 years serving mankind, okay? Thank you. We are saying that micro Takaful is a mechanism to provide Sharia base to blue-collared. That is the underprivileged individuals at an affordable cost, because that is the question. They want to access finance, but they may not have collaterals to approach banks, and even to buy these products is a challenge to them. So that we design, as he said, simple products that are affordable. And we can design micro Takaful products to cover health for teachers and students. We can also design micro Takaful to cover group personal accident to students. And we may also design simple micro Takaful products to cover farmers in the rural, in their agriculture, as well as poultry. For this concept to continue to serve mankind and spread, the regulators have a great role. They really need to understand and appreciate that the objective of Takaful or Islamic finance is more to do with poverty alleviation. If that is the case, it includes financial inclusion, ethical financing, transparency and fairness. Takaful is therefore catering for all. We take it that the regulators' interests should include creating the enabling grounds for the growth of Takaful and non-interest banking as the most recent tool for poverty alleviation and economic growth. If financial inclusion remains a challenge to our economies in Africa, and Takaful and non-interest banking is perceived to be promoting financial inclusion, creating employment, contributing to economic growth through tax payment, and helping the needy through zakat and the fulfillment of their corporate social responsibility. Then we take it that the regulators' interest should include supporting such a venture and making it also much easier than sometimes certain measures that they take, which is more or less strangling this new concept. If it would mean that they have to even come in to participate by supporting in educating players at their expense, I believe is worth the while, because you are more important when you regulate something that is significantly meaningful to the economy. We know the penetration of insurance in Africa has been very low. So if you are to support this new concept and this penetration grows, then you are more relevant to the authority, that is government, that you are representing when they come to work on budgets and all that. But it's no point when this is a new concept, not so much as Sister Zainab said, the perception at first was wrong, that is Islamization. It is not. When I established Takaful in Zambia.
Sorry, Brahmo.
Just 1 minute, 1 minute.
Please,
I'm saying the entire staff there were non-Muslims. When we started Jais Takaful, the head of the IT department is non-Muslim. You go to West Africa Takaful in the Gambia, the head of operation is non-Muslim. This is more to do with fairness, transparency, and also pays back to the people by way of profit sharing, and the zakat goes to the needy. So if you do not even have anything to think about insurance, you pray for Takaful, because when they are successful, one day they will knock at your door to give you zakat.
Benefits. All right, thank you.
Thank you.
So when Takaful operators are successful, everybody benefits. We need to have simple products. We also need to have regulations that support those products. Michael, I'm going to ask you to speak to us around specific technology examples that you've seen that can help us design simple products. But before that, let me go to Malam Zubair from the regulator. So there's a lot of poverty on the continent, and certainly in Nigeria. And Micro Takaful can help to address reducing poverty, managing risk. Yet, we don't have enough, in my view, Micro Takaful operators in Nigeria. I mean, what is regulator thinking around how we can increase the number of Micro Takaful operators, given the significant market and the need that we have on the continent and in Nigeria?
Yeah. A'udhu billahi samil alim, bismillahir rahmanir rahim. Before I go into what the Commission is doing to encourage other players to join the Micro Takaful, I would like to highlight on 3 or 4 key issues. that are very vital, deducing from the presentation. That first of all, that micro Takaful can be a viable proposition if the key success factors are provided. That it has the potential of bringing into the insurance net a portion of our population that stay out of insurance because of faith and other ethical considerations. That just like it is a conventional micro insurance, micro Takaful can enhance the economic stability of low income by providing both financial and social security. And last but not the least, the need for proper regulation. So in terms of regulating a micro Takaful, the National Insurance Commission took a proactive approach by issuing a guidance note even before we received the first application for the setting up of micro Takaful operator. Though the guidance note is meant for existing players that wish to set up the Takaful window. So in essence, what we are saying at present is that only the existing players can be able to operate micro Takaful. However, the work is still ongoing to come up with a dedicated framework that will allow for a specialized operators. In terms of encouraging other players, I believe when we are able to come up with a dedicated framework, it will give an opportunity for not only the present Takaful operators, but also specialized operators that will come into the market to offer only micro Takaful. Yeah, thank you.
Thank you. So there is ongoing work to develop specialized framework for specialized operators. Yeah. Can I challenge a bit further and ask, is that something we should expect during the life of this President Tinubu administration, for instance? Is that something we should expect?
Yeah, of course, because as I mentioned earlier, we issue a guidance note even before we receive the first application. And the guidance note is derived from the principle in the guidance note are derived from the Takaful principles. The only, and also some of the principle that is in the conventional micro insurance guidelines. The only difference from the micro insurance requirement is the Sharia compliance requirement. All other principles, especially the swap that Mr. McCoy is been emphasizing on, is the same thing with what is obtainable in the conventional microinsurance. Thank you.
All right, thank you. So watch this space. Soon there will be framework for specialized operators.
Very soon, inshallah.
Inshallah. So Michael, let me come to you around technology. So Nigeria is 225 million people. Mobile phone penetration is above 100%. Africa is 1.3 billion. Mobile phone penetration is huge. So what are the ideas you can share from other markets that we should be looking at in terms of how we can use technology to really drive micro Takaful penetration?
Excellent, thanks. And technology in micro Takaful is one of the key drivers of improving cost structures, okay? You need to have technology, at every point that you can have. Back office certainly should be heavily technology laden. And even the front office, dealing with clients, dealing with those transactions, that should also be technology driven. But the one caveat that I have is that we need to make sure that our clients can access the A, right? They have to be able to access the technology. You have more than 100% access to mobile phones. And so does that mean that everybody has smartphones? I see a lot of people out there developing products for smartphones, and they think, oh yeah, we're going to be able to go out and do all this stuff, but people can't get them right now. In the future, certainly they will. Maybe they can't use them. So we have to make sure that people can actually use that technology. The other side is that it can potentially get the product out to more. So maybe what you have is you have your Takaful groups, and some people within that are agents, basically. And they use the technology to help register you. And we have to think about technology in two phases. One is attracting the client and getting the client to want our product. People aren't going to buy Takaful because you send them an SMS. Okay, it's not going to happen. But once we can sell it, then that's when we use the technology to manage their transactions. And you've got countries all around here. I think even Nigeria will take mobile minutes for premiums. I know Ghana does, but they'll take mobile minutes, or you can get mobile money, and you can use it there. So now it becomes very easy for you to make that periodic transaction. You don't want to have to go back to the client and keep saying, oh, Mamadou, do you want to buy insurance again? No, it doesn't work. So yes, use technology. Be careful of making sure that your clients can actually access it and that you've got some level of touch that helps them to have the confidence to actually put their money in and buy Takaful.
Thank you. So technology is an enabler, but we've got to be sure it's the right technology and that clients have access to it. And if I look at the banking sector, so huge number of Dr. Jibril. So Africa is a diverse continent, 54 countries, different regulations, over 3,000 tribes. So even if you talk about Nigeria, 200 million of us, over 200 tribes, different cultures, etc. So how can we mass appeal that would allow these 1.3 billion Africans, and the poor of them, and more than 30% of that population is poor. How can we drive mass appeal to push micro Takaful and make it attractive to this huge market of over 400 million poor Africans?
All right, thank you very much. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم وبه نستعين. When you look at Africa and our structure, then you begin to see that having a product that cuts across us becomes a challenge. If I want to do business in Nigeria with Brother Juf in Gambia, it's extremely more difficult for me than doing business with a company in the UK. I cannot get a direct flight to his country. I would rather want to fly to Dubai before I come to Gambia. If I want to do business with a brother in Ghana, I will need to introduce the USD. So the question is, what is the dollar doing in business between Nigeria and Ghana? What's the business of dollar? So currency and Exchange is a fundamental problem that we need to quickly get around with. Secondly, logistics across this country is another fundamental problem that we need to quickly get around with. Now, if you now look at this environment, we talk about two major sets of people, young people as well as poor people. For the young people, especially in Nigeria, for us to make Takaful, micro Takaful attractive to them, we have to leverage on technology. The old way of selling won't work for us. We also need to look at a different way of selling to them. The old way of distribution will also not work for us. We need to look at distribution differently. Just like the old way of marketing, that is presenting the product and creating awareness for the product, won't work for them, we need to look for a new way of creating this product for them, of creating this awareness for them. So when you look at us as a people, we then need to have specific programs and product designed for us. The unfortunate thing about designing product for the poor is that they are not always in the room when we are designing the products. They are not there. So we think the poor people are thinking in a particular fashion, which most time is not the case. Again, I've listened to the conversation since morning up until this time, and I want to challenge the operators. Stop waiting for regulation. Regulation does not bring about creativity. Creativity should lead regulation and not regulation leading innovation. NICOM has had a co-creation hub. How many of us are using it? Let us take this hub, let us look at the practicality of our people and what we need to do for them. Let us bring up this product and then begin to co-create with them, such that as we are doing it, we're teaching them the regulation. We're telling them, so this is how to regulate this. Not that we now finish the product to keep us in the cooler for another 1 year. That won't work. When you mention insurance and micro Takaful, for the youth, is something that looks too classical, looks too old. So they find it very difficult to get their mind around it. So is there a way we can present it that looks more modern, more trendy, more fashionable, more easy to go around with? When we begin to look at product differently, micro Takaful product differently, then we begin to make more sense. I agree that micro Takaful is not a cure-it-all for poverty. It's not. There are products that we need to give to Dr. Shoaib and his team to go and help us deal with in Islamic social financing. However, there are the active poor. When we classify the poor, we can classify them into three. The active poor will lash into this, and it will make meaning to them. However, the handicapped poor will find it difficult. And the poorest of the poor will not go close to it. So let us begin to look at the ones that Dr. Shoaib and his team can help us take care of in Islamic social finance while we support them, and the one that we can quickly take care of with our Islamic microfinance product. Thank you.
Thank you, Dr. Salahuddin. I mean, a few very interesting comments. Creativity must lead innovation. Innovation should lead regulation. And I recall in 2000 when we were working in my personal career to set up InterSwitch, the central bank and the banking sector did not have e-banking guidelines. We started with InterSwitch and then worked with the Banking Supervision Department, BSD of the CBN, to draft the first edition of the e-banking guidelines. So a challenge to us as operators to also move ahead and then work with NICOM to put regulations in place. And technology can help with distribution, with marketing, with packaging, etc. We have 10 minutes to go. I would have loved to take another round of questions, but I'd like to get a few questions from the audience. I'm coming, Ms. Malamode. I don't know if there are one or two questions from the audience, and I really can't see. The light is straight in my face. before I come back to my panel.
Thank you. Good afternoon. I stand on all existing protocols. I'm Muidat Bello. And the question is to Mr. Michael McCord. It's in respect of the Pakistani flood issue that you mentioned. And then you ended it with the fact that it's always better for us to keep the animals alive than to, get the compensation. But in this case, it's like a force majeure where they didn't even anticipate. You also said that was going to happen. So in this type of situation, how do we ensure we keep the animals alive? Because the incident has happened, and most often than not, especially in this part of the world, evacuation and things like that is usually very problematic for us to have done. Then there's something that was mentioned by Mr. Sulaiman. Sorry, what's his surname again? And it has to do with the poor.
Juf.
Pardon me?
Momodu Musa Juf.
No, for him.
Okay.
Salahuddin,
Dr.
okay.
Salahuddin.
Okay, thank you. You said oftentimes when we are making products for the poor, they are never in the room. And I think most of us, we look at it that the poor could be serviced one size fits all, which, like you have, pointed out now, it doesn't really work that way because you make those products, they are not using it. So how do we ensure their inclusivity? We need to ensure they are included from the get-go. So I want you to also let us know how we'll be able to do that. Thank you.
All right, thank you. So, Michael, you want to take your response to that? And then after that, Dr. Salahuddin.
Yeah, I'll start with the Pakistani flood.
Thank you very much.
How we keep
it has been a wonderful afternoon here. My question will be directed to Dr. Salahuddin Jubril. It's
Hello,
about...
who's that?
I'm here.
My apologies, but I didn't call. But, okay, so I'll take yours as the very last question. What's the name, please?
I'm Lawal Hafiz Arishekola.
All right, so that's the very last question. Then the panel will respond. Yes, please, your question.
Thank you. My question will be directed to Dr. Jubril Salahuddin. And the question is directed to one of his last remarks regarding regulation shouldn't lead to creativity, that creativity should lead to regulation. So in our own palace, in our local palace in Nigeria, I want you to fully diffuse that so that we can be practically able to relate with that. Because the way you've said it now, it's easily said and done, but how can we really walk that talk for our local ecosystem? Thank you very much.
All right, thank you. And I think we have one more question from the online audience. So you can please read it.
So this is from Noha Mohammed, who is in Egypt. He says his question is for Mr. McCord. What are some examples of Takaful product innovation, especially in the areas like micro-Takaful for low-income populations? And the second question is for, unfortunately, there might be a typo with the name. It just says Haja. The question is, what innovative strategies are Takaful companies using to build customer loyalty and understanding in non-Muslim majority countries?
All right, so Madam Mamadou, you can take those questions, but Michael, you can then, the Pakistani flood question, if you can take that.
Okay, thank you. Now I can do it, right? Yes.
Now.
So the Pakistani flood, we talked about keeping those cows alive. We talked about keeping the animals alive. If you think about what was happening in Pakistan itself, right? Any river flood, it takes a while before the flood gets to your place. And so to me, it seemed they had 2 or 3 days from when the flood was clear up in the north to when it hit where most of the clients were. And I said, so why isn't there some kind of early warning system? And there was none. So we've been talking to the meteorological department. And on the one hand, if we talk to them and we can get the data about what's happening with the flood, how deep it is and such, and we have GPS coordinates for our clients, or maybe our clients' husbands if they don't have phones, or somebody in the community, then we can warn them. The distributor can warn them through that system. There's a program in Ethiopia, Djibouti, Somalia, and Kenya that's being run by the World Bank. And what they do, when there's a drought, it's called the DRIVE project, but when there's a drought, they provide feed for the animals. That's the coverage. Because again, their thinking is keep them alive, don't let them die. And so those kind of things. In the Republic of Georgia, we did something with veterinarians. And I thought, okay, because people have to pay to have a veterinarian come out and look at their big animals, they're reluctant because right away there's a cost. And so why can't we create some kind of a system with the university that's training veterinarians and make it so that those people, our clients, can call directly to them and say, hey, my cow has this or that. And we learned that with 3 pieces of information, temperature, respiration, and one other, sorry, I'll think of it. But with those 3 pieces, you can eliminate 50% of those visits. And all of those examples are keeping the animals alive in this case. So I hope does that address your question? Good, thank you.
Thank you. I mean, that's useful. So, Dr. Salahuddin, then after that, Mola Mamadou. Inclusion, how can we really design products for the poor, and how can we be ahead of regulation?
Yes, thank you very much, Sister. The questioner wants to find out about how do we include the primary consequence of the primary target market in the design process. So what is normally done is to take a sample from that particular constituency, and in the product design, you put them in the same room with the product engineers, and you work with them, asking them questions, what they would prefer, what they would like, how they would like it, and those responses is what you are now building into the products, not you assuming that this is what they would like. Okay? And so when you are able to do that, you are able to get market-ready information from them, which you now build into the products. And then you go to tests. Then you see the response, bring it back to the laboratory, and fix whatever you need to fix into it as well. And I'll give you a simple example of this from milk. I've sold milk before. I'm sure a lot of people know. Okay, so I happen to be one of the first people that sold milk in sachet in Nigeria. And what we did was, it was at a time when it was difficult for very poor families to actually add milk to their tea. So they would rather have a tin milk, use part of it, and seal them out with some paper and put it in floating water. You remember? Yes, beautiful. So, and if that is not done, the milk goes rancid. So we now said to ourselves, at what point are we able to sell milk in smaller sachet to people? First, we discovered we couldn't sell evaporated milk in that way. So we had to, first of all, bring the milk in powdered form, powdered milk. Again, we will now work with the people to say, how much can you afford per single serve? And the consensus was 5 naira. For a single serve, 5 naira. So we had pricing information from them. We took that. What quantity of milk will color this tea that you need for a single serve? So we tried different grammage, and we arrived at 7.5 grams. So we were able to then pack 7.5 gram of milk into a sachet, present it to the reseller at 4 naira, and this onward sell to the consumer for 5 naira. And within the first 2 months of operation, we sold close to 500,000 tons of milk powder. Because we were working directly with information from the target market. So this is one of the ways where you can actually carry them along. The second question, I was talking about regulation leading innovation or innovation leading regulation. And I'm emphasizing that in our climb, we must insist on innovation leading regulation, because you cannot regulate on nothing. You have to regulate on the products. And as such, we have to be the one to design those products. And I'm challenging the Takaful company again that what we need to do this is to have a robust R&D. Ajia Zainab spoke earlier and eloquently this morning about having R&D, combined R&D for the industry, a joint R&D for the industry, where we are thinking of product. You must be leading us, so you are preempting us. You are leading us, and you are designing this product. And while you are designing it, you are not telling regulators, come and take a look at what we're doing. The regulators will be far more happier with us when they see this happening. Thank you.
Thank you. We're out of time, but Brother Mamadou, can quickly address those questions.
This is just an appeal to the organizers. Well done. May the Almighty Allah continue to grant you to do it always better every time. But it's like we are into a forum of Islamic finance. I think it's about time we design it, the timing in such a way that even if the Zuhr time is allowed for lunch so that people can go and pray. I know getting the attention of people and then giving them break, most of them don't come back, but definitely it's an obligation on us as Islamic finance promoters to also observe the hours of prayers. May Allah make it easy for all of us. Assalamu alaikum.
Wa alaikum salam wa barakatuh. And there's a prayer arrangement just behind there. There's a mat that I've been, and I've noticed quite many people who have gone to pray. So for those who are not aware, there are mats just directly behind there where you could pray. All right, so I think that brings us to it. Time is up. I think the lesson is there's a lot of poverty on the continent in Nigeria. Micro Takaful can help to eliminate poverty. It's tied to the SDG goals. It's relevant. Technology can be a way to distribute it, to design it. But in designing it, we must do it with the target audience, co-create with them, design it with them, and work with regulators to then ensure that this is a product that meets the needs of the customers, fulfill the Sharia compliance, but also meet the regulations of the land. So I think that will be my key takeaway. So thank you, Michael. Thank you, Malam Subar. Thank you, Malam Mamadou. And thank you, Dr. Jubil Salahuddin. And lastly, let me thank the audience and also No Takaful for the opportunity. Thank you. Wa alaikum salam wa rahmatullahi wa barakatuh.
Another round of applause, please. Gentlemen, if you could please just step forward so that photographs can be taken very quickly. And while they're taking the photographs, this conversation was on enhancing economic stability for low-income communities. Our able moderator, Mr. Alani Yusuf, the speaker, Michael J. McCord, Zubair Darazo, Momodu Musa Juf, and Dr. Jibril Salahuddin. I would like to invite a member of the board of directors from Nur Takaful Insurance, Haja Mariam Ibrahim. She will quickly appreciate your presence on the panel.
I think if I can get Michael McCord to help out with giving the plaques, that would be good, because we've already gotten one. So, Mamadou Jof, so if you can help me hand it over to him. So I want to do it together with you. Mamadou Jof. Thank you. Dr. Salahuddin. So, Mr. McCord. Help. And Mr. Darazo, my regulator. And finally, the moderator, Mr. Olani Yusuf. Thank you very much. Thank you for that, Mr. McCord.
A final round of applause, please, for our panelists. We're going to take another address very quickly from one of our sponsors. We have a representative of ARM with us. Our apologies, we're just experiencing a slight technical issue, but we will fix that very quickly.
Good afternoon. Who are we? ARM. ARM, we are an asset manager. You can see on the screen our vision, which has been updated very recently. We were supposed to be the preferred financial partner in West Africa. Now we have changed it. We are going beyond West Africa to Africa as a whole. So providing access to global wealth creation and opportunities. Basically, very soon you will see products from ARM coming into the market, addressing the African market as a whole. I will be jumping a bit to show you a brief overview of the group. So ARM is an asset manager with 30 years of existence. What do? We provide basically asset management services across various asset classes, both traditional asset classes and alternative ones. So we have ARM investment managers, ARM trustee, ARM securities from the traditional asset management, and agribusiness, infrastructure, and real estate, which focuses more on the alternative side. The fund under management is at 1.3 trillion naira. We are rated AA, both by Augusto and GCR, which is basically the best rating you can get in Nigeria. We have over 150,000 clients, and our clients cut across retail, private, HNI, UHNI, and institutional clients. And our staff count 450. So we have a strong track record, very high research background, and the top of the class advisory. So I've touched base a bit on the asset management, real estate fund business that we have. Just few achievements from ARM, you may know or not, since we are here in a non-interest conference where we all know that the importance of asset-backed investment. So those are a few projects ARM participated in, putting together financing. So for example, the Lekki toll gate. Few people know Azura also, which is another PPP project ARM championed. Also 4 Point, which is basically just across the road, is also one of ARM achievements. I will jump a bit some slide. So why are we rated AA? Those are the strength of a company. So clear reporting lines, experienced decision-making committees, all independent, very clearly defined processes for the decision-making, a very strong support from the entire ARM group, and a very strong risk management process. ESG also, which is something very important. We have been speaking since this morning. Basically, ESG principles really sits in the core of everything that we do at ARM. Now, just to wrap up, I will maybe touch base on 2 products that may be of interest for our audience. So we just got an approval from the Security and Exchange Commission to launch an ARM Sharia-compliant fixed income fund. The fund basically will be investing in sukuk, both sovereign and corporate, rated at least BBB. Obviously, the aim of the fund is to provide stable returns, superior returns, while investing in Sharia-compliant fixed income. What is the target market? Basically, retail for as low as 10,000 naira, or HNI or institutional for at least a minimum of 10 million naira. The fund size is 1 billion naira, and we intend to distribute dividend semi-annually, so every 6 months you will get a dividend, and at least 25% of the profit will be distributed to investors. So it's a fund that is regulated by the Security and Exchange Commission. Here you have a bit more details about our custodian, who will be custody of the assets, and the trustee. Also information about the benchmark and asset allocation. So target market, I mentioned it earlier, retail, HNI, UHNI, and institutional. Another product that we have, ARM Ethical Fund, which has been this year celebrating 20 years. Basically, this fund invests in a mix of securities, both equities and fixed income. This morning, during the panel, we discussed a bit about it. The benchmark is a composite with the Lotus Islamic Index and a 5-year sovereign Sukuk bond. And the size of this fund is 1 billion naira. Performance has been around 20% on average over the past few years. So in case you don't want to invest just into a Sukuk fund, you also can look at this product, which is a mix of equity and fixed income. Thank you very much.
All right. Our last panel for today gives me the opportunity to refocus once again on this year's theme, Islamic finance and Takaful, building resilience in a volatile world. Our next set of discussants are discussing the broker's role in uncertain times. The panel itself is actually titled Strengthening Financial Resilience Through Takaful, the broker's role in uncertain times. I do have the pleasure of introducing the moderator who will lay the foundation and introduce our speaker for the discussion. Dr. Olushola Oloye happens to be the chairman at LIB Insurance Brokers. He's a highly skilled consultant with expertise in financial management, risk management, financial advisory, taxation, business strategy, forensic auditing, and corporate governance. He has worked at organizations such as KPMG, Sahara Energy Group, and Sovereign Trust Insurance, as well as with government agencies like ICANN and ACCA. Please join me in welcoming Dr. Olushola Oloye to the stage.
Thank you, everyone. And it's my pleasure to be here this afternoon. It's been a great conference. And I must tell you, discussing Takaful in a gathering of this nature provides us with an opportunity to see beyond just insurance protection, but to also be able to ethical values and the inclusiveness who are going to help us to address this major topic, strengthening in an so welcome everyone to this session, and it promised to be very exciting. Thank you very much. Happens to be Prince Babatunde Oguntunde, Managing Director and Chief Executive Blattern Insurance Brokers Limited, a prince from Ilishan Remo, Ogun State, Southwest. He has over 4 decades of experience in insurance world profession. He's also the current president of the Nigerian Council of Registered Insurance World Brokers. His success in this chosen profession is that of a divine word grace and tenacity for what purpose. Join me in welcoming Prince Babatunde Oguntunde, which happens not to be here today, but is ably represented by Mr. Duro Dola, who will be representing and be making a speech on his behalf. You are welcome. Okay, to join our guest speaker today, a group of panelists with so much experience in the industry and have made a lot of valuable contribution, starting with, as one of my panelists today, is Mrs. Bola Aziz, Chairperson, First Adequate Benefit Insurance Broker. Dr. Bola Aziz is an experienced insurance broker, motivational speaker, inspiring mother with over 30 years of experience. She started her career as an insurance agent, and she has become an expert in various aspects of insurance today. Madam, you are welcome. Thank you very much. To also join on this panel, we have the pleasure of inviting the Deputy Managing Director of Og Robinson Nigerian Limited, Mr. Saeed Egbeyemi. Mr. Saeed Egbeyemi is a distinguished professional with several fellowships, served as Deputy Managing Director in Og Robinson, and is one of the leading insurance brokerage firms in Nigeria. He's also a fellow of the Chartered Institute of of Insurance in UK and also here in Nigeria. He's also an alumnus of several schools and a member of several professional clubs. Thank you very much, Mr. Egbeyemi, for joining us on this panel. Thank you very much. And to call on the final panelists today, our session happens to be the final session, and we have Mrs. Bukola Ifemade, the CEO of EMDI Capacity Development World Limited. Mrs. Bukola, you are welcome. Mrs. Bukola Ifemade is an experienced insurance professional with also over 3 decades experience, and she holds a bachelor and master's degree in actuarial science, and is a member of Chartered Institute of Insurance, UK, and also here in Nigeria. Mrs. Bukola, we're happy to have you on this panel. Thank you very much. At this point, I made mention earlier that Takaful Insurance has become a major game changer in the insurance industry. And we've got quite a lot of people in the industry to embrace it. Quite a lot of other sectors are also warming up, gearing up to embrace it. One of the things we'll be showcasing from the broker's perspective this evening is to showcase that beyond just insurance protection, Takaful promotes quite a lot of ethical values and financial inclusion. It gives us opportunity to discuss from broker's perspective, and quickly we'll be having our guest speaker sharing the message from Mr. Oguntunde. Mr. Drodola, Mr. Oguntade. Okay. Over to you, sir.
Right. What of the guy that was not around? Where is he? No, the guy that attended virtually.
Good evening, ladies and gentlemen. I stand here on behalf of Prince Tunde Oguntade, FIN FCIB, the President and Chairman in Council of the Nigerian Council of Registered Insurance Brokers, who is unavoidably absent here today. The job or the role that he has been given to come and perform, it's a simple one, courtesy our council, because we have a full-fledged Takaful and Microfinance Committee, which is one of the strongest committee of the council that I chair. He starts by introducing the historical background of insurance itself. And here he said the historical, sorry, I'm not going to read verbatim. Once I read part of the thing, then I can talk more on it, then we can move on. The historical development of insurance made us to believe that people who do business together as a means of strengthening their cooperative intent ratably contribute money to compensate anyone amongst them who may suffer loss or damage to goods, especially through sea voyage. But whenever there is no loss, the contributed fund will be shared back to all contributors. Nothing is different between this and the development of Takaful, except for the halal, the absence of usury nature of Takaful. Simply, what insurance stands for and the concept of insurance started in a manner by which Takaful is treated today. In fact, maybe people then never knew that applying the doctrine of fear, especially when you put in perspective what the way the Takaful is positioned, or the guidance or the doctrine that it is following. Because, you know, in those days, also people have fear, they have fear of God, they put themselves in another man's position, they don't want to take what does not belong to them, they want to be fair to each other. And then they've said, let us come together. Let's be guardians of each other. Let's be each other's keepers. And so when we have the fear that we may suffer a loss, let us gather money together. If anybody suffers any loss, we compensate such person. If he doesn't suffer any loss, we share our money back. And that was the principle and the basic upon which insurance itself started. And if you look at the basis of Takaful today, the issue, allowing Sharia to guide it is the main thing itself. Furthermore, he said the donors, in Takaful, we look at people who make contribution as donors, more or less, because it is supposed to be something that is from your mind, not something you are coerced to pay, or what you are put under pressure to pay in terms of the conventional premium, which is paid, in conventional insurance system. And the donation is intended to make sure that people who suffer loss are compensated, and those of us who, if there is nothing like that, we could share the money back. Takaful operator, the Takaful operator manages contributed funds and runs its operation commercially as a business venture for profit in halal instruments on behalf of all contributors or donors. The principle of making it to be halal is the difference between the conventional insurance and the Takaful itself. And when something is halal, with due respect to people who are more knowledgeable in what it should be here, it is a pure thing. It is free of sin. It is free of usury. It is free of any coerce. And such fund, however, if it is invested in instruments that are also have components like that, then our fear is removed. Now, the overview. There's no gainsay the fact that profit maximization or in fact profiteering has overshadowed service provision in most businesses nowadays. Every business all over the world today are based on profit. The intention of people who invest in any business is to maximize their return. In fact, people will ask you what is the ROI of any business before they go into it. And if the ROI is not attractive, they tend to shy away. So, profit is one thing. First of all, people who are fair are not after profit or a very high profit. But then, profiteering is also happening in business. That people want to make more than profit. And it always, usually it causes trouble between people in some setup. Now, in some parts of the world, especially the Europe, they have tried to balance the two between capitalism, although the capitalism and socialism used to be the forefront of economic system. In the Europe, they try to bring another balance into it and make it to be something like welfareism. And that's what we have in places like Europe, in the Netherlands, and some other places. But then, it is very difficult for the whole world, substantial part of the world, to shy away from capitalism. In fact, in Russia and China, where communism was the basis of the economy in the past, they have gradually shifted to capitalism. And maybe this is as a result of the pressure from the other parts of the world in order to maximize profit or in order to be able to get more to distribute. And so the survivor of this, we said, have the issue of establishing stability between capitalism and socialism. Has it solved the problem of the world? It has not. Capitalism, the answer is no, because as the whole world tried to stabilize, capitalism, which believes that all is fair and good in money-making, has turned mankind against fellow human beings and allowed him to make as much money or wealth as possible, even at the point of death or detriment of others. So the intention of capitalism is not to, all is fair and good, so far you make your money. But this is what we are trying to shy away from. And anybody who, I was discussing with somebody a few weeks ago. I run a poultry. At a time, I had 19,000 birds. In a year, it reduced to 9,000. In 1 year, it reduced to 9,000. But when I was investing in it, my intention is I just want to invest in it. I will want to stand by it. And the advisors told me from the beginning, he said, Mr. Adodola, do you have some money to throw away? Before we started. They are big, they are very big. In fact, they are the biggest in Nigeria. They are the only one that have grandparent stock in Nigeria today. They asked me, do you have some money to throw away? I said, no problem. But you see, the first advice I got from farmers around the place, there are other farmers there. There are Lebanese, Syrians, Indians around the area where my farm is. They said, do you know what? If you want to make profit from this business, make it mixed farming. I said, what do you mean? I don't like crops. I have done crops before. I don't want to. They said, look, where you can make your profit is from piggery. I said, haba. For God's sake, I'm a Muslim. The man said, oh, forget it. Then you continue to make your loss if you can't go into it. Because it said, look, if you have a pig, it can give you 16 piglets at a go. If you have 16 piglets, and that is how the multiplication could continue. Instead of the dwindling number of the birds, you have increase in the number of pigs that you have, and you'll be able to make profit and also. But I told them that, look, I cannot do pig business. If I go into piggery, I am now gradually I will go into production of mutton as consumption for people, and I will be running against the tenants. And I said, well, if it's religion that you are following, good luck. But then, there are Muslims who do it. Because they gave me examples. But I cannot argue with them. Well, we know that. And that is where the issue of making profit in any way comes in. Now, the syndrome of capitalism is reversible with the acceptance of Islamic and Takaful and Islamic financing system, either through banking or insurance. The intention of insurance is to make good any loss suffered by man which is not designed or intentionally created by him, but it has a cost or price, which conventionally is called premium. This is arrived at by statistical computation taking into consideration factors like underwriting expense, claim cost, and profit margin because operators are in the business to make profit. Thus, it is driven by that profit. However, with Takaful, the element of profit is downplayed or totally removed, and when this is done, the cost is reduced to affordable level by participants, and unhealthy competition is eliminated. The premium payable or paid becomes common project for the insured or insurer, as well as the profitability or otherwise. And this is fair enough. Now, the global financial circle. The global financial circle have turned around many times, but in the recent witnessed a very volatile and harsh, but relatively stable and underwhelming growth, which characterizes the current phenomenon. But this is only the satisfaction and benefit of majority world powers, who dictate the pace and are base of heavy manufacturing plus unrestricted access to the international market and adequate finance. It is expected to remain so with notable revisions occurring beneath the surface with upgrades to the forecast for the powers that be, especially United States and its allies, who, except China and Russia, the world powers, except Russia and China, all others practice full capitalism. And this is also used by way of neocolonialism on the world at large. So for us who have passed through pre-colonial period and we are still under another one, they use it as neocolonialism on us. And because also we feel we also want to build more wealth, we have to follow them. Thus, even with the practice in China and Russia, which now tends towards similarity with capitalism, meaning that virtually the whole world economy is profit-oriented, probably profiteering with the exception of where Takaful financing system is practiced. Let me move quickly to the crux of the matter, which is financial resilience. Sorry. I'm sorry. Financial resilience. Financial resilience is the ability of a person, country, or system to bear or withstand shocks or disruptions to its financial position or standing, either by loss or destruction of money or assets, because there exist adequate resources and strategies in place to recover quickly or adapt economically. Let's just take example, the COVID during the past few years. Within that period, the economies of some countries went down because of their inability to absorb the shock, because it actually dealt with the economies, especially the international business. For people, it also affected local people. I was also affected, seriously. In the first few weeks, I cannot go to my farm. After 2 weeks, I told my wife one day, I said I must reach Ibadan today. He said, how am I going to make it? I said, just don't worry. Then I picked my car, carried some feeds, put them inside the car, and was on the expressway. For the first 40 minutes of driving alone, I didn't meet anybody until I got to a quiet place when I saw, which was boundary between Ogun and Oyo State. And the people came out and they said, blah, blah. I told them I was going to the farm. They said, but you know this, that, and everything. After some time, they said, okay, if you are coming back, bring something for us. I said, well, I am going to the farm. I'll bring food for you. When I got to the farm, it was part of the time when we started losing our beds. I met almost 17 sacks of 20, 15, 30 beds that are dead that morning. Because my men were still calling me, I have to come, they cannot handle this thing again. And how do we get drugs? Where we have to buy drugs, they also cannot open shop. Meanwhile, we are also producing eggs. We have thousands of crates of eggs in the farm. So we were losing eggs, we were losing beds. That day, I had to pack the eggs. And I drove down back to Lagos. I asked them to bury the beds, brought the eggs, and I stopped at the one major market in Baga. For those who know Lagos area, I started hawking the eggs. I wanted to sell for any amount, although I sold everything quickly, but I sold at a loss. As a practitioner or as a businessman in that field, that is also how to test my capability, whether I can withstand the shock or not. But to people who said, practice mixed farming, if I'm losing beds, I'm losing from eggs, and my pigs are doing well, I probably will make money from that to hedge whatever I'm losing from the other side. I mean, I'm just using that as a little example for any country also. Where you are unable to build wealth, although I'm not encouraging what is not halal here, please. If I am now saying as a farmer, I want to rear some pigs in order to make some money. But I'm just looking at it, there are clean businesses that we can also do. So for a country also, if you want to test the financial resilience, it is when there is difficulty. You want to see whether they have been able to reserve funds, whether they have been able to build wealth over time, which could be deployed when there is difficulty or when there is things slow down. So the resilience of the Islamic financial sector, including Takaful operation to the global financial crisis, made possible by Sharia guidance of managing wealth, combined with the relative growth of oil wealth in the Middle East, has enabled the industry to grow at an unprecedented rate. As of 2022, the total assets of the Islamic financial industry was in excess of $2.5 trillion. Thus, many countries, especially in the Asia and Middle East, both developed and developing countries, continue to seek to provide it with a sound regulating infrastructure and efficient investment opportunity, e.g. the Sukuk Fund. It is because enough fund has been built out of this Islamic financing system that provided Sukuk. When you are traveling around Nigeria, you probably would see signboard of Sukuk funds being used to do some of our roads. Nigeria also benefited out of it. A lot of countries, especially in the Southeast Asia, they rely on it because those who are actually contributing to it are there, Malaysia, Indonesia, and other countries. So, another parts of the world. In the past 10 years, allowed funds and contribution of Takaful insurance to the which is of high performance. For example, the Malaysian Takaful industry enjoyed relatively faster penetration between 2002 and 2010, when it generated about $1 billion, especially the family Takaful. At present, there are 15 direct companies and 3 re-Takaful, with earnings increasing over 5 years, as stated here.
Thank you, Mr. Ogun, Mr. Drodola.
Yeah.
We have,
so Takaful to the rescue. Yeah. Because of the whole world economy, which has tilted to capitalism as a system, profit orientation is the in thing in many businesses, insurance inclusive. With widespread introduction of Takaful, the profit or profiteering rate slowed down, and people's orientation can be reviewed at least. Most people who believe in Takaful conclude that conventional insurance does not comply with Sharia because it contains usury or riba. It includes an element of al-ghara, That's uncertainty. It also resembles gambling. So that gives it strength. With the establishment of Islamic insurance companies in Sudan, Islamic Insurance Company of Sudan in 1979, there has been progress in more of such. Well, now, the role of a broker, well, most of us know who a broker is as professionals, the in-between underwriters and the people. We need to do more. What are our limitations? We have to look at it. How is the environment faring generally for them? What are we doing to build more wealth? Some or all of these questions needed to be answered before appreciating what they can do. So in conclusion, we will want to see more penetration of the brokers into the market so as to create more wealth to be able to build resilience when we have any such. Thank you.
Thank you so much, Mr. Drodola. It's been a wonderful presentation, and I'm sure we've all benefited so much from the wealth of knowledge that has been shared. More importantly, so many things were mentioned, practical examples were shared, and we really appreciate you for sharing your thoughts with us. Quickly, let's go into the real discussion by making sure that we are able to meet most of the major requirements. One of the things I would like to start with first, Mrs. Aziz, the chairperson of a leading insurance brokerage firm. Now, let's look at Takaful. How can broker improve client awareness about what Takaful, knowing fully well that the conventional insurance, the traditional insurance has, eaten so deep that, people, it's taking them a longer time to embrace Takaful insurance product?
Thank you very much. Good afternoon, good evening, ladies and gentlemen. The speaker has spoken, and I'm sure we have a take-home. He has marshaled the points on the area of some benefits, some reasons why Takaful need to thrive. Now, as a broker, who is a broker? He has even mentioned that, so thank you for that enlightenment. As a broker who has been in the business for quite a while, a broker is an intermediary. And we all know that what brokers does is more of try to educate the grassroots. But when our speaker was talking the other time, shortly, he said he's mentioning about poultry, which I want to start with the question. I want to start with that point. When you are talking of how could a broker improve Takaful operations, majorly you can't sell what you don't know. So the first thing a broker needs to know is to have in-depth knowledge of what is Takaful. And when you have in-depth knowledge, you now need to know that because you are communicating with majority of the people that may not have the knowledge, so the knowledge of Takaful will disseminate to the grassroots. And for the people that want to patronize or that want to encourage or that want to make Takaful as the key insurance, because if you look at what the presenter has said, yes, Nigeria, the awareness is becoming more. I started selling Takaful as far back as 12, 13 years ago, and I discovered that even the Christians are patronizing Takaful more. And if I have opportunity to meet a broker, I always tell them that because it's inclusion, it's win-win, just like a slogan of one of the operators. If something happens because of is a donation instead of the premium, two is participants. People come together like what he said in the olden days. When I started selling insurance 36 years ago, 1988, it was so amazing that when you say insurance, they say insurance legalized robber. And kudos to Takaful that they have been able to make us to know that it's no longer legalized. And what are they saying? What they are saying exactly is when they pay premium and nothing happens within 12 months, that's 365 days, what you pay, is gone. That is conventional insurance. What Takaful has done is to come up with win-win. If you donate and there is a problem, the operator, the Takaful operator, instead of insurance company now, will now come to your aid. Just what they do in the olden days, that they come together to go to one farm, they will farm. Today, they will go to another farm and farm there. So what they do is, okay, now, if you have a Takaful insurance, what it means is, if nothing happens and the portfolio has been able to generate profits, all the participants will share from the profits, which makes it inclusion, unlike the other one. So now people are looking at it that instead of me paying and I don't have anything back, the Islamic insurance, which is Takaful, they are addressing that fear. Fear makes people not to be able to. So as a broker, when people talk that insurance, if I do it, if nothing happens, a broker will be able to let you know that, come, don't worry, Takaful will solve your problem. You are thinking of, if I don't have a claim, what happened? Takaful will make sure that he addresses that. And if there is a claim, they are wonderful when it comes to claim payments. They keep the promise. So broker ensure that when you are trying to get the business on board, is a safe, is a well-analyzed risk, and we try to advise when necessary on claims. Thank you.
Thank you very much. I like that beat, win-win. So Takaful brings about win-win situation. Thank you very much. Now, to further buttress on that particular question on attractiveness and getting more people to embrace Takaful insurance and getting to know more about the value of Takaful insurance beyond just insurance protection, I would like Mr. Egbeyemi, as a veteran in the industry, to help us address this question of how can broker position Takaful as an attractive option compared to the conventional insurance, especially in a time like this where people complain of financial hardship.
Well, thank you very much. Sorry, is it okay? Yeah, thank you very much, Dr. Olowoyaye. Let me start by standing on all existing protocols. And I am privileged to have been one of the very few people in this hall that actually has been part of the customer of No Takaful, even before the company was formally started operation. And I will tell you very clearly that I've been one of those people that have actually benefited in what we call a win-win situation. I have a fridge in my house, which I bought with the return I got from Takaful then. So, on that note, but the main thing we are talking about here is the resilience and as well as the role of insurance brokers. In any situation, an insurance broker has three major roles to play. And the first one is to be able to get the cheapest possible premium for your client. Number two is to ensure that that cover you are buying, in spite of the cheap nature of it, it is as wide as possible, meaning that you are ensuring that the client's policies covers every aspect of his fears. And thirdly, you have to ensure that you are placing the risk with the right insurance company that will be able to meet the claims when it arises. So taking a cue from that, from what my moderator have just requested, in a time like this, there are a lot of challenges that clients are having generally. Even before now, talking about insurance to people, to sell insurance is as difficult as selling anything you think is difficult. But the general thing people say normally is to say the insurance and have not been created, have not been creating sufficient awareness. They are, just like my sister said, oh, they take your premium, they don't pay. Insurance is the only safety net that can sustain any business. Even the banks, I'm sure we have some bankers there, they will not give you facilities without ensuring that you have insurance that will cover your risk. So what it means is that at the end of the day, they will have to run back to the insurance company to actually protect their assets. So in a situation where you now have this problem of galloping inflation, where it's becoming more and more difficult for people to even eat, let alone talking about how to pay insurance. Whether you now like it or not, you are still keeping those assets, and those assets need to be protected. Because if any of those assets that you have is damaged or lost to any of the unforeseen circumstances, you will be worse than not having it. So you then need to look at, okay, how do I, in spite of the circumstance we have here, how do I ensure that I am still protected? The first thing you need to do is to ensure that you are insuring, you are paying your premium. But to pay the premium now becomes a problem. So I think one of the things that particularly, I will address this to Nur Takaful Insurance Company, is you have to start creating a kind of an opportunity for clients to be able to pay what you call small. You know, you have this waka now when you want to buy ticket. They will tell you you can pay small. If you have an opportunity to pay, to buy ticket, they will tell you you can pay for a period of time. Not without compromising the Insurance Act that says no premium, no cover. All you need to do is to make sure that there is an opportunity for the client to be able to pay on a monthly basis. Otherwise, to ask somebody to pay a million naira premium in January when it is possible for him to be able to spread it over a period of 6 months or 1 year. I think we need to look at that area. By doing that, you still have to ensure that you continue to remain compliant, because we are talking of Sharia compliant insurance now. And you have to ensure that those people that are coming to you, they are coming to you on two bases. They don't want to do the conventional insurance, which they believe is haram, because it's very similar as far as they are concerned to gambling, to insuring uncertainty, which is not allowed in Islam. Whereas insurance is, like we said, is a cooperative thing that every individual within that group are actually one for one, one for the other, one for all and all for one. So you need to ensure that that compliance is ensured. The other thing you need to do is to try and make sure that if you have a situation like we are saying here in Nigeria, people need to know, to be aware. So, and the role of a broker there is to be able to try and educate people around you, to let them know the availability of the Sharia compliance, the Sharia insurance, which is the Takaful, as against the conventional insurance, which a lot of people don't believe that. You pay your premium, you continue to pay the premium. If you have paid premium for a period of 10 years, and the 11th year you decide that you are not going to pay premium this year, and you suffer a loss, unfortunately, then you are lost, you have lost everything. Whereas that doesn't happen with Takaful. With Takaful, year in, year out, they calculate whatever the premium they are able to get within the period of the year. Whatever profit that comes out of their underwriting, then part of it is shared, whilst part of it is retained. So this encourages a lot of people to do this insurance. Thank you very much.
Thank you very much, Mr. Egbeyemi. And I must tell you, we need to note that Takaful is more than insurance. Takaful goes beyond just providing insurance. Takaful goes as far as ensuring commitment to ethical value and financial security. Over to you, Mrs. Ifemade. Being a consultant and being a specialist in capacity building, what skill do you believe we need as brokers to effectively navigate and contribute to the knowledge about Takaful in Nigeria and, all over the world?
Thank you very much, Mr. Moderator. And I want to first of all start by congratulating Nur Takaful on your second successful outing of this international conference. You've done very well, and I'm so proud to always be associated with you. Talking about the skills the brokers need to have. As some of us may be aware already, that the insurance market in Nigeria, 70% of the premium is actually generated by the brokers, who are the professional sales team of the industry. And Nur Takaful has been very smart to really tap into that area. While I'm a consultant, I must also say that I was the MD of a broking firm for 18 years. And because I'm very passionate about insurance penetration in Nigeria, is what has made me to transition to become a consultant. And the major focus is on capacity building for the insurance brokers. Like Dr. Bola Assis said, The first thing is you cannot market or sell or promote what you don't have knowledge about. So it's very, very important for the brokers to actually have adequate knowledge of Takaful products. And I would strongly encourage Takaful to be very strategic and innovative in educating the brokers. Because when I got into selling Takaful products, I remember some 7 years ago, their officers came to my office, spent 1 hour trying to educate me. I'm a Christian, I didn't know anything about it. But by the time they finished speaking with me, I became one of their greatest promoters, always selling Takaful insurances. And for the years I sold Takaful products, it's interesting that, which is an irony, the people that actually resisted amongst my customers when I introduced them to Takaful products were actually the Muslim, interestingly. And the reason was because, not that they don't know what Takaful stands for, but because of the brand. Brand is very important. So while the brokers need the knowledge, which Takaful need to be very intentional about, at the same time, Takaful also need to promote more of their brand as well. Having said that, technology is also very important, because in this day and time, we're in the technology and the AI, season, so brokers have to be very, very technology savvy. However, while brokers are going to be technology savvy, Takaful also need to be able to enable them to have a plugin, because they're not just going to sell the products, you also have the capacity and the provision in your technology software you use in-house, where brokers can easily, not just to sell, but also operate the policy on behalf of the contributors that they sell this to. Having said that, is also you can't beat that negotiation. When Mr. Alajagbemi, when he was talking and he was talking about brokers having to negotiate minimum premium contributions for their customers, is also the sales skills and the negotiation skills. Because brokers always have to look for the minimum premium, or what we call contributions under Takaful, for their clients, while they also ensure they are very, very effective and positive terms and conditions that will also be to the benefit of the customers. So having said that, this, amongst many other things, are actually what brokers need to have. But for that to be successful, Takaful, you're already doing so well, and I'm always so proud of you. But I would say, please, be very intentional, especially as we are going into a new year in your marketing strategy, on how you can really, really, take over that scope in the broker's world and make them your effective sales team. Thank you.
Thank you very much. Wow. I mentioned, I assured you that we have distinguished panelists, and they are going to help us with this conversation. Just like I mentioned earlier, that Takaful is more than insurance, we need to also note that brokers are more than just intermediaries. As brokers, we do beyond just intermediary. We try to provide what we call equitable financial solution. And so, we don't have so much time again. We have just about 3 minutes, 4 minutes. I would like you to just mention how we can assist clients, just maybe 1 word, 2 words to wrap up, how we can help our client to build a resilient portfolio as a broker, not just buying a protection for them, but helping them to have a resilient portfolio that will be able to stand test of time, that will be sustainable. Let me start with Dr. Bolas's. And then our guest speaker will make the final comment. Thank you very much.
Thank you very much. Thank you very much. That's a wonderful question. And I want to start by saying that, first and foremost, kudos to the organizers of this program. We are starting. Can you please give the organizers a very beautiful round of applause? Yeah, as a broker, what we do is so simple. And the truth is a picture. What you see in the mirror is what people want to see. If you see yourself as a positive thinking person and somebody who is excited about what you are doing, I'm sure the masses, the people out there will see you the same way. So the first thing that we need to do with our client to make sure that resilience is, yeah, people are talking of economy, but people are still getting donations to the operators, Takaful operators. I don't want to use premium. People are still paying for their risk because you know that it's better to have something you don't need than for you to need something you don't have. So what broker does is to get closer to our potential buyers, that is our prospects. And the same thing goes for the Takaful operators. You can't just be sitting there. The armchair kind of operations has come and gone. So you need to make sure that you're out there, you are, in terms of social support, you are there. In terms of training, encouraging the youth, the young ones, you are there. If you don't say, there you are, nobody will say, there you are. So if you are winking in the dark, nobody will see you. So what it means is you just have to be out there and be sure that Takaful is what it has come to stay in Nigeria. And in a couple of years, Takaful will overtake the conventional insurance. That I'm very sure.
Thank you very much. Over to you, Mr. Gbayemi.
Well, thank you very much. Just in addition to what she has just said, one of the things I think no Takaful needs to be doing, in addition to what I said about the issue of creating flexible payment plans, they need to start developing more products. Because one of the challenges of Takaful in Nigeria is the limited number of products we have presently now, as well as the opportunity for investment too is limited, because we are talking of only investing in halal investment. So there is need for them to create products that will be micro products that will be more than, that will be able to compete effectively with the conventional insurance policies. The other thing they need to try and do is create a kind of a crisis support center for their clients. That at this period of time, there are a lot of emergencies that happens, and you need, as an insurance broker and as the client too, you need to ensure that claims processes are done as quickly as possible. And this is what will be able to encourage the people that are potentials as well as your current clients. Thank you very much.
Thank you very much, Mr. Gbayemi. Over to you, ma'am.
Yeah, very quickly. Okay, so I'll just use a simple, practical example of something I've done before. And to help customers to build a very resilient portfolio, insurance portfolio under the Takaful. So what I did was I only spoke to the customers about what Takaful gives. And fortunately, Takaful has been very transparent, which is very, very important attribute of an insurance company, and especially a Takaful operator. So having said that, the customers, educating them, doing the profiling, because it's very important to do the proper profiling, and then giving them the appropriate Takaful products that meet their needs. Interestingly, knowing they're going to collect surplus if they don't have any claim, they stop having claims. They stopped making claims, and they started expanding their portfolio because they realized that for every year they don't make claim, they get something back. That encouraged them to do more insurances and to become better risk managers. So at the end of the day, the customer is having expanded insurance portfolio personally. They are having surplus, they become better risk managers. And Takaful is also expanding, so it's win-win both ways.
Thank you very much. And to our guest speaker, a final word.
Yeah, thank you very much once again. I think three things which are key into success of this is, first of all, what Mr. Moderator has mentioned, the issue of win-win. Once we are able to impress that win-win situation into our clients, they will buy more into it. And I also believe it's a challenge more to people who believe in halal not just by mouth. If we have about 80 million population of Muslims in Nigeria. In Malaysia, there are about 25 million. The total premium from Takaful in Malaysia
It's more than the total premium the insurance industry in Nigeria is making. It is because people will believe this is halal, this is halal. Let's take it like that, not just by mouth, but also by our behavior. And that will have a drawing effect, impactful effect on all the population. People will now know that it's not just by religion, it's not also by population. In India, India has the third largest Muslim population in the world. They don't even look at Takaful. So it's not just only about population, it's not only about religion, but then we have to lead by example. So we need to do more. And if we do more, the potentiality is there for us.
Thank you so much, my great panelists and our guest speaker. I must tell you, it's been an exciting moment in the last few minutes, and it's been very interesting. I've been on this journey with Takaful. I'm sure it's right from inception till date, and I've been a beneficiary of some of the surplus. And there was a particular year I came for the surplus sharing, and it was Pastor Kojo Yemade that came to chair the occasion. So it's not about religion, neither is it about population. It's about commitment. We need to be committed to want to do this. So quickly, we have just about a few minutes to take additional questions from the audience and those who have joined us from online. This is an opportunity to ask your question. And please make it straight to the point, and then we'll be able to manage our time well. Thank you very much. Do we have any question from the audience? Or my panelists have done justice to everything? 2 questions? Okay, let's have, okay, there's also one here making 2. So let's start from this side, and then we'll come to you. Thank you.
Good afternoon, ladies and gentlemen. It was a wonderful panel, and thank you to the panelists. I have one question. You talked about accountability and the knowledge of what you're selling so you can be able to sell it. But I haven't heard you talk about sustainability. As a broker, what role do you play in grooming the next generation of brokers, in ensuring the dissemination of information, especially to the grassroots, to the communities that are not out here where these conferences are being held, where they don't have enough access to technology to gain all of this information? How are you training the next generation to take over so that there's more financial inclusion as a broker?
Okay, thank you very much. I think we'll also take the second question, and then the panelists will address it all at once.
Thank you very much. My name is Professor Abdul Salam Ismail, a member of ACE Nur Takaful and Kitmei Smart Consultancy in Dubai, United Arab Emirates. Thank you for this very interesting last section. Most of the conference where the last sessions will be boring, but people, for the passionate we have for Takaful industry in Nigeria is more active and more promising. So my comment, is not a question, is that the broker, it is used by the conventional. So for the next generation, or we can say the best practices which we have in Takaful industry based on the global practices for the broker, we don't use the conventional broker. We use, they call them terms as agent. So the agent, or you call it corporate agent. So this is one of the things that people will believe more. The market will believe that, no, the broker will have a very unique to serve for the financial inclusion and for the next generation who are coming to treat them as not broker, but the agents. Thank you very much.
Thank you very much. I hope that 2 questions will be what we'll be able to take. And quickly, I think Dr. Bola Aziz is eager to respond to that first question. Thank you very much for the comment. Over to you.
Thank you very much. The questionnaire, the person that asked that question is like trying to make us to believe that, yeah, the audience are really with us. So thank you for that wonderful question. Yeah, the truth is, the Gen Z, the youths, are the ones that will take over, whether we like it or yes. And what are we doing as brokers? SRIB, that is Registered Insurance Brokers in Nigeria, there is a group which at a point, the Takaful operators key in to ensure that they come around to enlighten the brokers. And it will interest you to know that this person talking to you, as part of the contribution to make sure that we disseminate this information of Takaful, we partner with NASFAT, we partner with some churches, don't let me mention my names, I can mention NASFAT because I'm a bona fide member. Now, to go around on Sundays to enlighten the masses. In addition to that, what we do is to have a roll-up banner of Takaful operator, and the NASFAT assigned us as brokers to go to all 380 branches worldwide. So sometimes we do technology like what my sister said, that's technology. So we use Zoom, we use all these social medias to talk to people, even in diaspora. And as I speak, some of the clients abroad are even porting to Takaful because they know that when it comes to claims, they are proactive. When it comes to risk assessments, they are very, very good judgmental. And on top of it all, people want to know, because I have been in the industry for quite a while, just like some senior professions. I have traveled through so many routes that I discovered that what people want is, if nothing happens, something must come back. So, what brokers, yesterday a broker visited my office. The era of we are competitors has come and gone. My brother has been so helpful. He is Og Robinson, I'm first adequate. And he's a broker too. So we come together to see how can we even the moderator is a broker, the presenter is a broker. So we are all coming together to say how can we make the industry to look better. The era of legalized rubber has come and gone, and we, the broker, are sanitizing it. If it's not with registered insurance broker, then you are missing it. So the registered insurance broker are having the knowledge. And what I have done to any broker that I come across, which that's what it does too, is to let them know the first, Takaful and confessional insurance are not the same. While you are talking of premium, they are talking of donations or contributions. When you are talking of clients, we are talking of participants. When you are talking of insurance companies, we are talking of operators. So all these terminologies analyzed, and by the time you now said, is win-win. If you have a claim, good. If you don't, be rest assured that something will come back from you. Like what Mr. Alaji said, that we should just be sincere. Once there is sincerity of purpose, I'm sure we don't need adverts. People call me for insurance now. I don't need to go to radio to announce my name, because what people want is sincerity of purpose. Are you sincere? Are you genuine? Are you ready? Then don't be tired. I will leave this one. Don't be tired while you are looking for something. It will surely yield. It's like a farmer who is trying to plant something. When you plant a yam, it's not the same day that germinates. So let's be patient. But the youth, we are trying to bring more youth in. Now he says something, the second person that spoke, let me quickly say that. He's talking of corporate agents. In my CV, what he read, he said I started as an agent. People don't like the word agents. When you say agents, they are looking at all these those people that their shoe is praising the Lord. You know, when the shoe has chopped the bottom, you know the shoe is looking like this. So people don't enjoy agents. And honestly, within the few months in my career, I quickly changed to sales executive.
Correct.
I promoted myself. So, because when you say agent, they say, oh, this agent, don't start again. So, maybe we'll look for better name. I will be glad to work with Takaful operators to look for better name. But please, I just intentionally put that agent so that you don't go to corporate agent. Don't demote us, please. We are brokers and we will perform better. So, thank you.
Thank you very much. My distinguished and, esteemed, panelists for doing justice to this particular session and for sharing your insights, experience, and being very practical with most of the solutions that you have provided. And to most of the questions that have been asked, you can be rest assured that the brokers you have currently are laying the right foundation for the next generation to take it from. We've started playing with the word professional. We call them insurance professionals. Instead of using the word agents, we call them insurance partners. We are trying to look for better word to use than the word agent. I must tell you, thank you once again, and we appreciate you. On a final note, a word from me. As a broker, let's see this beyond just an opportunity, but a responsibility for us to connect with our clients to make sure that we don't just give them a product, but we give them product that aligns with their ethical value and their financial practice. Thank you very much, everyone.
Another round of applause, please, for our panelists. I'll take photographs very quickly. Right there. The photographer's in front. The conversation on strengthening financial resilience through Takaful, the broker's role in uncertain times. A big thank you to each of our panelists, our speaker, and our moderator. At this point, I'd like to welcome the chairman of Nur Takaful Insurance. He will be presenting our panelists and speakers with a token of appreciation. We have presentations for you. If you'd like to change your name and perhaps give someone else. Dr. Lushala. If you could pull forward for the photograph. Dr. Bola Aziz. On behalf of Prince Babatunde Oguntade, sir. Mr. Saeed Egbeyemi. Mrs. Bukola Ifemade. Another round of applause, please, for our final panelists. And certainly a round of applause for yourselves as well. We have come to the end of the first day of the second edition of the African Takaful and Non-Interest Finance Conference. Just a reminder that, again, these conversations have been curated around this year's theme, which is building resilience in a volatile world. Tomorrow offers us another opportunity to explore more conversations, deeper conversations around building capacity, leveraging technology, and continuing to understand the principles around Islamic finance and how it is these principles are able to be applied in today's world. At this point, I'm very pleased to tell you that we will be starting those conversations at 9 a.m., bright and early tomorrow. Beyond this, we have come to the end of today's proceedings. Lunch has been served. The same points where you were able to get your tea break, please. You can return to those points and you'll be served food. My name is Nabila Usman. I am a journalist with Radio Now here in Lagos. It's been a pleasure to be your MC for the day. See you bright and early, 9 a.m. tomorrow.